Buenos días, estimados, ¿cómo están? Estamos aquí en la sesión de bolsa en vivo. Eh, Mercados andan lentos. El chisme de hoy, el chisme financiero de hoy es que Trump puso 50% de aranceles a Brasil y pues Brasil va a utilizar la misma herramienta. Entonces, así vamos. ¿Qué más tenemos? Tenemos grandes rendimientos. Los rendimientos del día fue above, ya se acabó. Ya vendí la posición, ahorita les muestro. Estaba checando Tesla, estaba checando Vito, pero esperen, Tesla ya se cansó, ¿no? Tesla. Sí, como que ya se está cansando. Este, no, sí, pero es para mañana, cierto. Ya se está cansando. ¿Qué más tenemos? ¿Qué más tenemos? El TQL, vean, el ETF de la tecnología, pues a la baja ya se está recuperando. Bitmain sigue sufriendo, o sea, vean, $54. Ayer tuvimos una caída de $50. Impresionante. Impresionante para los shortistas, claro. SUCP, ahí la lleva, es buena empresa, entonces esperemos. Estoy ahogado de trabajo, tengo que registrar las operaciones del día, tengo que checar las noticias de las empresas que cotizan en los portafolios y tengo que estar al pendiente de las órdenes del día. Ah, Voy a poner esto en lo que sigo trabajando,
Later this
aunque
month.
también
For more
antes
on this
necesito mi café.
debate, let's bring in Steve Kovac, who covers Apple for us, as well as Deirdre Bosa, who joins us from San Francisco. Steve, let's kick it off with you. I mean, this is quite a lot of change at the top of Apple. Do you think it's enough to satisfy investors who may be disenfranchised with just the overall iPhone picture and AI strategic decision making?
Yeah, well, I would also just note, Leslie, that there's changes at the top. Jeff Williams, who's the chief operating officer, he didn't really have much to do with artificial intelligence at all in the first place. That would go to John Giandrea, the executive who does report to Tim Cook and is still working there. So this is more of what they call like a planned succession. It is also the second top executive to leave those executive ranks since then. As far as the AI story, yeah, that is a valid criticism. What the Lightshed note has been saying, said last night, nothing we haven't heard before. They're behind on AI. They did not deliver their promises from last WWDC. We talked a lot about how there was kind of a lackluster on the AI front at this year's WWDC. At the same time, though, they are not going to put out a product that isn't ready for prime time. And the optimism in the stock over the last couple of weeks has really been tied to that Bloomberg report that maybe they're not going to build their AI in-house. They're going to do what they did in search with Google and partner with someone like Anthropic or OpenAI in order to build that foundation for this new AI update to Siri. And if they don't deliver on that, and then boy, do they have a problem going on there. But right now, it seems like they still have a little runway. It's not like people are running out and ditching their iPhones or ditching their Mac computers just to use different kinds of AI services on other competing platforms, Leslie.
Yeah, Dee, we've talked about second strike advantage at Apple for years. Is this just another second strike freakout?
It could be. I mean, Apple doesn't do things necessarily first, but it has a history of doing things very, very well, except maybe recently you could argue maybe with the Vision Pro hasn't taken off like some had hoped. But what I think it comes down to, and what I hear from people I talk to in Silicon Valley, is that AI is too important to sit back. It is a baseline in tech now. It is not debatable, that it is changing things below the surface, both growth for companies and the bottom line. You saw that at Microsoft saying that it saved $500 million last year in AI productivity. So for Apple to be sitting behind, I don't necessarily agree with Steve from the people I talk to that they have more time. It feels like the clock is ticking, and to have, for example, Mark Zuckerberg poach one of the most important executives working on foundational models at Apple, that is a big deal. So the Lightshed argument, I think, has some cadence with people here, and this idea that Tim Cook may be a peacetime CEO, and what Apple and all the mega caps need right now is a wartime CEO, someone to go on the offensive, because this shift is just too important to miss.
Yeah, and I would also add, guys, that, Tim Cook has been, this is not the first time he's had this kind of criticism thrown at him. When he took over from Steve Jobs, there were so many questions back in 2011. Should we have a operator versus a product guy like Steve Jobs? We're having that conversation all over again. And I will just say, every single time Tim Cook has proven those doubters wrong. There was that question back in the early 2010s about whether or not Samsung was out innovating Apple. Well, it turned out Apple was able to really leapfrog them right back by just making those big screens.
Past performance is not indicative of future returns, right?
But I haven't seen anyone.
Shift, I mean, I think Cook took over during the mobile shift. This is another one like that. He extended the run, but I don't know that there's necessarily been a shift like this one we're seeing in AI.
Yeah, and it could be, and they could totally whiff and miss it, but I mean, no one else has caught on to it either. The only company that's actually performing and growing and showing hyper growth is that company that hit a $4 trillion market cap yesterday, and that's NVIDIA. No one else, including Meta, who's spending enormous amounts of money, has really proven they can do it.
Yeah, it's an interesting time. On the one hand, I can see the argument for a logistics chief, given supply chain concerns around the world. But you got Johnny Ive doing very different things at another company now. Maybe it is time for some product imagination. Great debate. We're not going to settle it today, but I love having you two, Steve and Dean. Let's get to the judge back at post 9.5.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Another tech record as more firms urge investors to continue to buy stocks.
La verdad estaba haciendo cosas, no entendí nada de lo que dijeron. Va a aparecer comercial, no quiero que me baneen, entonces lo voy a dejar así.
Recovery in the U.S. consumer. Jobs or the labor market data, first-time filers for unemployment insurance. Better than expected, good number, trending back in the right direction. So, Tom, remember, I hate to say this so often, but we're in the middle of summer, and lower your expectations for any big effects. And I just don't think the market's going to get its heart rate up over trade problems with Brazil, Tom.
Yep, I think, another one that gets pushed aside. I think it's 22 letters the administration sent out to these other countries about impending tariffs that begin on August 1st. So, yeah, still navigating that to the positive side here as NASDAQ settled at record highs yesterday, Kevin, coming off here just a little bit, some weakness in some of the Mag 7 names, but it's definitely off its session lows. Also, what might be helping, and this might be just maybe the personality of the market, is that rally that we're seeing in Delta over 11%. They reinstated full-year guidance. They raised their dividend for Q3 moving forward, and CEO Ed Bastian was pretty positive after this report, Kevin. And you know what? This is kind of what we've seen in the overall market, right? There was a lot of consternation in April. A lot of people worried about the impact of tariffs. Delta pulled their full-year guidance, but now they're putting it back in and saying, hey, these tariffs aren't going to negatively impact us as much as we originally thought. And they were a little bit more, confident on the consumer and the economy moving forward, Kev.
I thought it was real interesting how he broke it down via more affluent premium seating versus economy seating. And the economy seating is the one that's struggling, but the premium and the international travel, that's still doing fine, and that's powering them, to good, solid numbers. And so, yeah, great recovery in Delta stock. And really, frankly, Tom, something we see all the time. Look at United Airlines, look at American Airlines, even look at Southwest is rallying on that news. So that sector is all higher. Remember, airlines and banks will start us off. Banks coming next Tuesday is going to be important. Bar a little higher for the banks. Remember, the airlines were all sitting significantly off their highs and a little more low bar. Remember, some of the numbers Delta was reporting were lower year over year. Yeah. So it wasn't like they were putting up great numbers. They beat considerably lowered expectations, but the stock was a reflection of those low expectations. They beat it. They reinstated some guidance, and pretty positive things happened there.
Yeah, and Kev, you make a good point. The comparables from year-ago levels, that's when, the airlines and the travel industry, midsummer to the end of the year, just started rallying and, parabolic moves to the upside. But we're also seeing, you mentioned the overflow into the other airlines. We're seeing it in the cruise lines. We're seeing it in the hotel stocks, some of the travel stocks also. So this is kind of, I don't know, is it reflective that, hey, the consumer is not going to be pulling back on spending? The jobs data is good. We got a solid jobless claims number that was 5,000 less than last week. So the jobs market continues to be robust at this point. So it's kind of exuding that confidence, across maybe all consumer discretionary stocks at this point, right?
Yeah, listen, this morning, Bank of America put out their consumer checkpoint, it's called, where they look at overall receipts. And remember, Bank of America, because their cards and how many cards they control, they have massive amounts of customer data. And here's the numbers, Tom. April was down 0.2%. May, down 0.7%. This is for total card spending. What is it in June? Up 0.3%. So big recovery in the U.S. consumer from this consumer checkpoint number out of Bank of America. And they have so much data. That's a real positive recovery for the U.S. consumer. And what is it in line with? The stock market, right? Stock market rallied, consumer feeling better about itself, consumer spending numbers back up, Tom.
Yep, crude oil price is down 2.2% at this point, back below $67 a barrel. That's probably helping out the cruise lines and the airlines also on that front. But we're seeing some weakness here, Kev, in some of the Mag 7 names. Got some, Microsoft off of all-time highs, Netflix down 2%. Meta Platforms down nearly 1% today. So it almost feels like, Kevin, this is another one of those rotation days. We talked about this last week when you weren't on air, that we saw the rotation where people were pushing into small caps. People were pushing into names that had been underperforming the Mag 7, which had led most of the rally. So this is actually a healthy kind of rotation, right?
Well, think about what started this week, Tom, ahead of earnings, right? Banks getting downgraded by HSBC, Bank of America, JP Morgan, Goldman, all downgraded. Why? Ahead of earnings, and because they had all rallied in the high 30% numbers. So people are starting to back off on some of these names that have rallied so much. Now, you can make a case, we're going to talk about Google Alphabet, that hasn't really rallied that much, but some of these other names have rallied pretty significantly, and you could start seeing as we start the third quarter, taking some, remember, we're at or near or above all-time highs on some of the indices. People might start taking some chips off the table here and getting ready for second quarter earnings, which you've mentioned before, first 2 weeks in July, very positive, and then we get in some bumpiness in the second half of July. So people might be taking some chips off the table in some of these widely held names, Tom.
Yep, not a bad idea. VIX is below 16 level. We have
Chéquense esto, cuando comienzan esas preguntas de keep buying stocks, es de que ya el mercado está en máximos, o sea, el mercado está llegando a su límite, el mercado en general, entonces es cuestión de tiempo para que comencemos a ver la baja, la corrección. El tema es, ¿cuándo? La otra semana tal vez, en un mes, o en 5 o 6 semanas, mes y medio. Diarios, necesito abrir mi archivo de diarios. Es que hay muchas cosas que hacer, me hago pelotas. A ver, vamos a diarios. Y en 30 voy a entrar a las carteras a actualizar todo. A ver, 30. Vamos a poner también esto porque si no. Listo. Vamos por acá. Vamos a poner esto.
Josh, on the
rate cut doesn't matter.
The S&P.
Yeah, nobody should be baking in any specific number of rate cuts as a means to say stocks therefore are 8 to 10% undervalued. Like that should not be the bull case that we're going to get like accommodative policy because the employment situation is going to start to suck. Mm-hmm. That's just it. The logic is completely backwards. Nobody should root for medicine. Look, rates are probably too high. Let's all agree, okay? Probably, given the actual like GDP growth rate and maybe given some of the softening in like initial claims, which honestly is not that bad, but fine. Let's just say they were a little bit restrictive. Are they 200 basis points over where they should be? No, I don't think anybody would say that. And you didn't need rate cuts this entire rally. So what are you begging for Sudafed for? I don't understand it. So that's number one. Number two, more important than any of that, is whether or not the CapEx theme holds up, because that's what's driving earnings, and that's what's driving the $2, $3, $4 trillion stocks that matter the most to the market cap. By the way, also driving the financial sector. All the M&A, all the venture-backed startup stuff, the IPO window being flung open, all of it is coming from CapEx. And I'll tell you something else that's not popular, but I'm going to say it. It's also driving the consumer spending. I watched TV this morning. The Delta CEO was on Squawk talking about the K-shaped recovery. They had like 3 different guests in a row, Bank of America, talking about it. Look, it's the top 20% of the country that's accelerating their spending. They're not doing that magically in a void. They're doing that because of what their brokerage accounts look like. Every morning when they open up the app, they're doing that because of what their 401k balances look like. That's why they're accelerating their spending on travel and luxury and services. So if you tell me that you think the AI CapEx tailwind holds up, then the domino effect for all of that is, well, the consumer spend is going to be fine. Okay. The leisure economy is going to be fine. Retail is going to be fine. Restaurants going to be fine. And that's the way that you need to think. Not, oh, my God, I need my rate cut. What's wrong with you?
I'll give you something on that. Piper today
says
the latest CIO survey reinforced a bullish spending backdrop for AI infrastructure, i.e. CapEx. Right? They raised their price target on Microsoft to 600. It was 475 prior. They raised their estimates. They upgrade Oracle to overweight. 270 is the price target. 190 was prior. If you look at the performance of AI infrastructure stocks since the April low, it's the power providers. It is the cloud providers. It is Dell, Brin up 76%. It is Vistra and Vertiv up 90 and 87% respectively. It is Constellation up 68%, Arista and Marvell, and that's just to name a handful and an extra one. But that's where the money is. You go where the money's going, right?
Absolutely. I mean, and I think that from the CapEx spend, I mean, we already know, we talked about this the other day, when Mark Zuckerberg is paying multiple engineers $100 million signing bonuses, CapEx is, I think, going to continue to ramp up. And so, you know, Satya talks about being, with the spend having like a high ROI, which is great. I think investors want to hear that. But I think with these big hyperscalers, the spend is just going to continue. I think that's why CoreWeave bought Core Scientific, because they need to control energy to build more. And so I do think, you know, NVIDIA's numbers don't come out till the end of August, but over the next couple of weeks, we're going to hear from all the hyperscalers, and I think they're going to reaffirm the spend. And you can list off those names again, or look at those names. All those names you just listed, the Vistra, the Dell, Oracle, et cetera, are going to be the beneficiaries of those. And I think, so you're going to continue to see that. I will say one thing on rates. You know, the CPI is at what, 2.5%? Fed funds are at 4.5%. Rates should be coming down, right? That's just like simple math. And I think that if it does come down, that will continue to push the market higher.
Yeah. Jason, you and Kevin both own Oracle. You guys own Microsoft. Brin does as well. Do you just continue to lean into these trades?
I think you have to. I think, to Josh's point, when you talk about CapEx, and when I think about it and look at these stocks and look at the reports, you know, I lean into RPO. RPO, which is remaining performance obligations, is up 34% for Microsoft. This is a huge company. That's $315 billion. So we talk about capacity constraints and what these companies are, the backloads are. I mean, demand is insatiable. So you look at that and you look at Oracle, same story. RPO is up 31%. That's over $100 billion of business that is due. That they need to kind of get through and get execute on. So for me, yes, that's what's driving the story, and I think it continues.
All right. So the hyperscalers, they continue to spend, or certainly are weighing the possibility of doing that to even higher degrees. Amazon weighing further investment in Anthropic. That's according to the FT. JP Morgan's Retail Radar says Amazon replaced NVIDIA as the most bought stock last week. Prime Day wasn't off to a great start. Sales down 41% on the first day. But again, are we talking about Amazon as the principal story is not about the marketplace?
No.
It's about the AI marketplace.
They don't even make money on that.
It's like the AI marketplace, which they literally, as the AWS CEO told us a few weeks back on the West Coast, that's what they're aiming to now build.
Yep.
Yeah, I think that's right. And this is the name. Look, obviously everyone knows I'm long NVIDIA, and I'm not rooting for there to be more competition on the GPU and training and inferencing chip side, but I do think like Amazon very seriously is week after week making AI or AI adjacent announcements on the hardware side that are really important. Like they're talking about their own chip cooling equipment right now because of how much usage there is in the data centers that they've already invested in. This is a really interesting situation because they've got that infrastructure and now they're spending to support it, but while they're doing that, they're finding ways to continue to innovate and bring
Estée Lauder la sigue rompiendo. Que el precio objetivo era $90. O sea, cuando el público en general se enteró que Michael Burr la tenía, estaba como en los 60, 65 y vean ahora. O sea, pone 50,000 ahí, ya, resuelto, quitado de la pena. Voy a mover un poco mi cámara porque creo que no me veo cuando me siento.
I also said that in December for the first half, and I was wrong. So I'm redoing that call. But I really think Amazon's not getting enough credit for how important AWS is going to be for this AI, the remainder of the AI decade.
Kev, Alphabet, tactical outperform. Evercore ISI, that's ahead of their earnings, which are obviously in a few weeks. Meta, the target to 765.
Paré la computadora en una base y ya no se calienta como antes. O sea, estaba acostado. Se calentaba horrible, pero ya que está como está ahorita, no se calienta para nada. Y ese es un parote. Para que siga siendo fluida la máquina. Ayer en el directo de ayer se me estuvo trabando. Bueno, no trabando, pero sí se sentía más lento de lo normal.
The prime week, the prime month is not as important as the ad revenue that you get for the ad eyeballs that come there. Everything else that they're doing. You didn't mention robotics or all of the other things that they're doing. Satellites, really going after Tesla. Meta is my top pick for the year.
Drone delivery. Yeah, the list is so long.
The best thing about this show is that I think all the viewers already own these names, so we're not looking at it to say, well, should we be buying these companies?
Hidden gem Amazon.
Qué bueno que tengo un escritorio gigantesco, pero aún así
or not is the question. When you're at record highs, when you have a sector like tech and stocks like these, not Alphabet specific,
so for all
obviously.
of them across the board, you wait for pullbacks and you can add to them 100%. I don't think you need to chase them here because when you talk about where these things have come from April to lows, it's incredible. But the 5-year trajectory, to me, is so exciting. I just can't wait till next week when we've got earnings.
Well, let me ask you this. By virtue of our conversation alone, we're 16 and a half minutes into our program today. It's been concentrated, hasn't it? All over big tech. And how can't it be? That's where the action is, which is also concentrated in the market, which people say the market is too extreme. Like Apollo today. S&P 500 concentration has returned to extreme levels. It's not good for investors seeking to diversify their investments across 500 different companies. Anyone investing in the S&P, they say today, is basically making a bet on the Mag 7 stocks propelling even higher. Okay. That's true.
This is because they're pitching private equity. The reality is, I heard all of that, like, oh, if Apple stumbles, then all these people who are invested in the S&P, they're going to have a lost decade, or they're not going to make. No, what actually ends up happening is Apple stumbles and Oracle comes along. Like that is not. It's fundamentally not how it works. That you have to have Mag 7 continuously doing 20% every year in order to make money as an investor in large cap U.S. stocks. I know people want it to be that way so they can sell an alternative, or they can get you into a small cap fund, or they can get you into a buffer ETF.
They're not the only ones saying that the market, though, is too concentrated. If you look at the outperformance.
No, it is too concentrated, but here's the thing. It's not as concentrated. All right, this is what I want to say. Forget everything I just said. Listen up. This is just my opinion. It's the mathematics. The concentration of the Mag 7 as a percentage of the S&P is lower at this 52-week all-time high than it was at the 21 peak.
Or 2023.
Or 23, for that matter. Thank you. So if you don't like concentration, I don't either. The good news is it's becoming less so. And why? Not because these stocks, NVIDIA is not shrinking. The reason why is you've got this second tier below the Mag 7, the Mag 50, whatever you want to call it. Names like CrowdStrike and Netflix and Spotify, not in the index, but you get the point. You've got Oracle, you've got all of these other market caps that have grown alongside the Mag 7, and in some cases have grown at a faster rate. So it's not an all-in bet on Microsoft and Apple to the extent that it was 4 years ago.
Financials and industrials.
Yeah. JP Morgan's at 800 billion. Thank you. JP Morgan, this is the best setup man in the business, by the way. JP, well, do you know the human head weighs 8 pounds, Jerry? No. Do you know that JP Morgan has outperformed 5 of the Magnificent 7 over the last 5 years? Not a lot of people even know that. JP Morgan is almost $1 trillion. Berkshire Hathaway hit $1 trillion. These are S&P 500
right,
names.
but you're highlighting the fact
that
this
as concentrated as you think.
It's not concentrated solely in big tech. It is concentrated at cap size, on the cap scale. Okay, Goldman and JPM and Caterpillar and Netflix and all these kinds of stocks. Those are the ones that have driven the bus.
That's every bull market in history, 1960s, 1980s, that's number one. 2, at least you've got sector dispersion now amongst these mega caps, and we're not just talking about iPhones and social media.
What about this?
Tengo que buscar
GNC. That's at a record high.
GNC.
12 positive days of the past 13 is what it is going for. There are some who are negative on the high vol trade. Some would say one of the knocks on this move, if you go outside of large stocks, like we just said, are lower quality, higher beta names have really gone parabolic in some respects, and that's a risk.
You and I have been here together for a long time. Didn't they say this was the problem in 2013?
2000, 99.
I mean, there are times where it's a problem and times where it doesn't matter.
And it doesn't matter now? I'm not saying it matters. I'm asking you guys, does it matter or not?
Didn't they do this in 2017? Small caps aren't keeping up. Didn't they do it in 2019? You still had plus 30% years for the S&P in those years. Did you have small cap participation every year that you had an S&P double-digit rally? No, you didn't. Get over it.
No, but I'm talking about, Palantir's done well, the ARK innovation funds at a 52-week high-ish.
Oh, come on.
You bought more DraftKings. DraftKings is up 14% in a month.
It's great when you can have these mid-cap, small-cap names ride the coattails. But, I mean, your true investment are in the large cap. It's fun to get into some of these smaller names. We bought DraftKings. To your point, it's up 14%. I like the momentum. But this is like a duopoly. They have 80% of the market share combined with
Ahora esto.
the other name.
Los sectores tienen título 2.
FanDuel, thank you. Yeah, FanDuel. So 80%. You've only got 25 states so far for DraftKings plus DC. Missouri might be opening up, but there's such
Porque lo que me sorprende es que esta en teoría debería estar saltando.
I think it's fun to own some of these names, but that's not where you make your investments. You make your investments in large.
Speaking of large, well, okay. Speaking of that, good segue. Back to Bryn for a move.
GNS aquí está, miren. O sea, empezó con todo el día, pero
when you were with us or the day
se
before,
ponchó. Y esto se ponchó. Vamos a ver a qué hora se
different
ponchó.
Stocks. Tesla, you did buy more
A
as you said you were
las
going to.
9:44,
Yeah, it was on Monday. You bought it at 293. You sold the
Consejo de
August
operación para si inician, operen 20 minutos
$14.50. Why is
si
now
no
the
les da
right time
confianza
to
el
make that
gráfico.
trade?
I think Kevin should do that trade too, or should have. Well, so I think that was the day that the American Party,
Maybe he already did.
Right? That was the day his American Party announcement came out, and so I just thought that I was surprised once again that everyone was surprised that he would do something like this, and I thought it was an overreaction. So I'm happy to own the name below 300, and the call premium's so high. So if it gets called away in August, which is 6 weeks away, I'll have made 14% in 6 weeks. If not, it'll lower my cost basis on this new trade by 14 points. So I think it was a win-win either way. I'm comfortable trading this name. I feel like that 250, 260 to 350. 360 is the range, and it's so big, so it's just a great opportunity to buy the name, sell some calls, and if it gets called away, it was a good short-term trade.
Bryn just loves the smoke. She likes the. I think you like. I think you're addicted to the drama here. Can I do like a very quick Tesla Uber thing?
Yeah, go ahead, because
all right.
Uber was reiterated neutral by Ives.
Yeah, I'm going to call him later. I don't like that.
And Tesla was reiterated underweight at Wells.
Right. So Ives, this is the only stock Ives and I disagree on, and he's made his bed with like the Tesla call, and I understand that he's more bullish on Tesla, and Uber's gone up a lot more. So maybe tactically he might get this one right. I don't have as good a handle on Tesla as he does. I would just point out Tesla is negative 25% this year. Uber's plus 60. Total return for the last 3 years, Uber is now better than Tesla, up 328%, Tesla up 31%. But then the 5-year is where Tesla has still been the better stock, obviously the more exciting stock. But like the more time goes on, the more people are starting to recognize that not every business Tesla decides they're going to get into do they become as dominant as they did on the EV side. And they're not even as dominant on the EV side that most people would have said they were 18 months ago even. So I think that's where the street is starting to wake up to this. I think there's a world in which both Tesla and Uber make a lot of money and do very well in robotaxis. But I have to be honest with you, the cost for Tesla to scale up its own network with no partners and the amount of time toward payback is like an incredible dollar figure. And in Uber's case, they can add EVs to the network right now, and it costs them effectively nothing. Might even save them money relative to the take rate of human drivers. You're telling me you think Tesla's better positioned than Uber for autonomous driving? Like how? Like literally tell me how. And I'm sure Dan has a great answer to that, but I haven't heard it.
All right, so we're going to take a break. We do have moves coming up. Kevin's got one, Jason's got one, and Josh Brown has a new name on his best stocks in the market list. It just popped onto his radar. It'll be on yours in just a little bit.
David trusts Prevagen for his brain, and this is his story.
Nice to meet you. My name is David. I've been a pharmacist for 44 years.
And then against that, you're selling the July 25th weekly 147 strike call. 690 debit, there's your risk, $690. Anything above about 144 is going to be potential profitability on this. You want it to go towards 147. That's not too far above where we're currently trading. But Kevin, Nate made a good point on this one, is the fact that, hey, you're buying the option series that August 8th that contains the earnings event in the stock, so that volatility, because you're buying Vega in this position, is going to probably or most likely will hold firm.
Yeah, here comes the trade-off discussion, guys, on option. Because Nate's buying an elevated level of implied volatility, right? He's buying about a 52 in aggregate and selling lower. That doesn't seem fundamentally sound. However, because you know that's the event, because the Thinkorswim platform tells you that, you know that in most cases, I don't want to guarantee anything, but in most cases, that vol should hold or go slightly higher at those levels. So the bad news is you're paying a little more for the price of that diagonal. It's trading $7 diagonal, trading about $7. And so you've really got to be cognizant of if it gets to that short strike. But you're already trading the event implied vol. So the good news is that will probably stay steady or has the potential to go higher. Do we know for sure? No, we don't. But that's part of the trade you're putting on here. You're buying the earnings event and then chipping away at that net debit. Think about it, Tom. There's about $2.15 in that short 147 call. If it were to move towards 147 call,
no sé qué hice para que se viera en HD, pero qué chido.
And the short call losing $2 or a big fraction of $2. So this has a setup. It doesn't look pleasing to the eyes, but when you do a little deeper dive, it looks much more attractive.
Yeah, and Nate mentioned the fact that the ability to roll or adjust those short options on this trade, where you're buying the ones that are closer to expiration, that short 147, rolling it to the next week. That can collect you some pretty hefty credits on this one. Just the near-term 1 week wide call calendar on the 144 strike between this week's expiration, which expires tomorrow, and next Friday, that's a $1.90 credit already. So if you have that ability to roll when the market's open, there's liquidity provided, you can collect some big, hefty credits ahead of that earnings event on this type of trade, and you can roll to the same strike. You can adjust that strike also, but the whole idea is it grinds up towards 147 for max potential profitability. You have some assignment risk on that short option also going into expiration over the next couple weeks here. All right, let's move on. We got take a quick break here. When we come back, Mike Folio is going to join us to look at sentiment data on Carvana. This stock has just rocketed over the last couple of years, up over about 170% over the last 12 months. Stick around.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan. He's a co-founder of Likefolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. So your data historically has been pretty positive over the last year and a half or so on Carvana. Is it continuing because the stock continues to move up to multi-year highs?
Yeah, this is an insane stock. I mean, I don't know if you guys can pull up like a 5 or 6 year chart, but this is unbelievable. I mean, I don't know of many stocks that have gone down 99% and then 100x'd after that. So back to where they were, right? I mean, it's a complete U shape. It's absolutely wild. Went from 376 in August of 21 to 3, and now we're back up to 350. And it's one of those stories. It's a huge turnaround story. It's really interesting, obviously. And the data is incredible on it. I mean, when you look at what they've done, you talk about how they're plus 33% on retail sales year over year. They're finally up to about a half a million pace on cars sold, and their goal is to get to 3 million on an annual basis. So they want to 6x from here. And even if they did that, that would only take them to 5 to 7% of the total market, depending on if you're counting used cars or new cars as well. And so right now they're at about 1% of the market, and all of their metrics are beating the competition. And then they're kind of a head scratcher. Like, how do they do it, right? I mean, they're paying more for their cars. When you go to sell your car, they're paying more than CarMax. They're paying more than Vroom. And so their supply is higher, but then also their margins are higher. So they're making more money per car. CarMax is around $5,700. Carvana's around $6,900. So they're paying more, but they're making more as well. And it's really all about the efficiency, that, you know, how profitable they are. They have a better mix of retail versus wholesale. So they're selling more to people. They appeal more to the average person than CarMax and competitors for whatever reason. I mean, the marketing is pretty cool with the tower, but everything is kind of moving online. Many people are now preferring to buy cars online, and for me personally, I would say new car, sure, I'm comfortable buying that online. Used car though, you got to have a lot of trust in that dealer and that all the service reports and everything to buy it online. But that's the way things are moving, and so I think they've established this really critical point of trust where people can say, well, if I buy it from Carvana, it's going to be good. It's going to, I'm going to get what I pay for. I know it's going to be a decent deal. And so that is very, very valuable. And so they're starting to build this reputation where they pay more, you get what you pay for, it's a fair deal. And they're also they're kind of cool, right? They've got some advertising going with John Hamm, and they've got pickleball stuff that they're sponsoring. So they're getting their name out there in a way that just equates them to not only cool but also great value. So the data that we've got is showing that that's continuing. I mean, when you look at web visits, they're plus 10% on a year-over-year basis, continuing to climb. They're hitting all-time highs on web visits. Compare that to CarMax, down 17%. So obviously they're eating their lunch, and they're doing a great job here. And when you look at the kind of the year-over-year, the line chart about the web visits, it's exciting, but just I got a little pause, because if you look at where it was in January of 24 there, that yellow line, it was pretty low, seasonally low. Makes sense. People aren't buying as many cars then. And it ramped up really strongly into the summer and fall of that year. Pulled back again in January, and then we got another ramp up, but that ramp up didn't continue at the same rate as last year. So yes, it's higher highs, it's higher lows, but the strength of the uptrend is just waning just a little bit. So while they're continuing to do really well, my only hesitation is what's priced in. Like, how much growth is priced in? Because I know a lot of people, that's what they look at. They say, well, they're only 1% of the market. They're going to get to 5% of the market. They're going to 5x from here, and everything's going great. And it is. Everything is going really well, but is it going at the pace that the market expects? So that investors expect, excuse me. So, and there's the chart that I was talking about. You just don't see that. I mean, that's insane. And to know that that's from 300 something down to 3 and back up to 300 something, that's normally you see a chart like that and you're like, all right, but what's the y-axis? Well, no, the y-axis is pretty much all the way to 0 there. This isn't skewed. And so this is an insane chart, and I really hope there's an investor out there that bought at 350, rode it all the way down and said, nope, I'm holding, and now he's back to even. That would just make my day if I heard that story. But that's where we're at on Carvana. Optimistic, just curious, and a little bit concerned about what are the expectations out there.
Landon, what took this stock to $3.55? It was December of 2022, not that long ago. Was the volatility in the used car market during and after COVID, and their ability to manage that. Now, you mentioned the number that
son 10.40, a ver.
$6,900 gross profit per unit. I have friends in the car business. That's the number that no one can believe.
Vamos en orden.
They just don't know how they're making $6,900 per vehicle.
Pues todavía, o sea, Fentos hace unos días tuvo un rally de no mames, o sea, alcanzó los $53, o sea, imagínense. PTH0, vamos a buscar el objetivo.
No one in the car business can understand how they're doing that. Now, that said, if we can't guarantee that uncertainty may not come back to used cars again, what do we say? Because the stock is not cheap. The numbers are video game numbers
y no tiene
that they're putting up.
Sí, cuando son muy volátiles no tienen forecast. Pero ha ganado $8 hoy.
Instability again in used cars.
Hace rato la compré en un portafolio de un cliente. Ahí la dejamos a largo plazo.
The biggest risk is other than the head scratcher one, which, we can talk about. But I think the biggest risk is what are investor expectations, and are they going to continue to live up to those expectations? Because the story is they're small, they've got unbelievable momentum, they're taking everything over by storm, and if that growth is all priced in and there's a little bit of a pullback in the acceleration, right? It can still go up significantly. Like we've got plus 10% on their web visits on a year-over-year basis. That's still positive, but were they expecting 20, right? Were they expecting 30? And if so, then that's negative, and that multiple goes both ways, as we talk about all the time. So when you price multiples in the future, any kind of hesitation on that multiple goes both ways on the stock price. And obviously, this is an incredibly volatile stock. And so between the head scratcher and the investor expectations, I think that's where your risk is for sure.
Landon, just full disclosure. I mean, I've used Carvana in the past, and you mentioned the competition with CarMax, right? They offered like 18% more. I just don't understand how their margins can be so high, because they're both used car retail sellers. Those, Kelley Blue Book and all this stuff, they tell you basically what your car is worth. I just don't know how they're making these margins. And Landon, when you see the stock with this parabolic move, the way it has snapped back, I mean, when you give an earnings score on a name like this, you got to be wary, right?
No, man. You got to be wary, obviously, yes. And so for us, the stocks run an incredible amount. And like I said, the web data is strong. Everything that's coming out from Carvana
manches, el 80% de todo, bueno, 72% corriendo, pero llegó hasta los 22. O sea, en un punto de 22 es más del 100% de rendimiento.
The acceleration of the web data has slowed, right? The derivative there. That puts us into slightly negative territory if there were to be reporting soon. But this is one that I can't buy personally because, just like Kevin says, I don't understand it. Like a lot of companies, I don't exactly understand how Amazon works, but I get it. Like I'm a customer, and they make incredible margins. They're super efficient. Carvana, I agree. Like, how do they pay more? How do they make more? On all sides, they're just doing better. So they've either solved a riddle that no one could solve for years, or there's problems underneath. And it's tough at 350. It is, but the comeback is unbelievable. I mean, the story of the comeback is just unbelievable. And I think that you just have to kind of step back and say, all right, assuming that everything that is coming, all the numbers are correct, then this is one of the best comeback stories in history, and they're on trajectory to do what they're saying, and they're going to have 5% of the market. So that if you accept that first part, then all right, buy on dips. If you're not so sure, or you're worried that expectations are too high and investors are getting ahead of themselves, then you might want to stay away from this one. So it's very tough, but absolutely fun to watch, that's for sure.
Yeah, beta of nearly 2. So this thing moves double about what the S&P 500 does on a percentage basis. All right, great stuff as always, Landon. Appreciate it.
Thanks, Tom. Thanks, Kevin.
All right, that's Landon Swan, co-founder of Likefolio, breaking it down. Kevin, you got an example trade for us. The stock's actually down $3. Not too many negative days over the last couple of years, but how do you want to look at this one from an example trade?
They don't have earnings till the 30th of July, Tom. And so what I looked at here is just going out to that 25th of July, staying ahead of that date of the earnings date. And I'm doing a trade that we do a lot. It's a complex trade, selling a call vertical to finance the purchase of a put calendar, Tom. So I went out to the July 25th, which allowed me to move further and further out of the money. I'm selling the 375, 385 call vertical. Now that would be a new all-time high and then some. And that's pretty much in line with that expected move. You're right, though. The stock has moved lower since we looked at this trade. Selling the 375, 385, and then buying the July 25, 330, July 18th, 330 put calendar. So buying the 330 put calendar, selling the 375, 385 call vertical.
Creo que necesito mis lentes, me están molestando los ojos.
It was at about a 30-cent debit, Tom. Now it's about $1.30 debit. So the markets are, you use a little price discovery here. The markets are a little wide. It moves a lot all over the place. But, Tom, this is one that, you know, even if it stays relatively range-bound, you do well. You're collecting a fair amount of theta. You're short about 12.5 deltas, Tom, and you're looking for just the risk in this trade is above the 375 strike. There's the risk of about, you know, $1,000 plus whatever you spend on the trade, Tom. So if it's 30 cents, it's 1,030. If it's 130, it's 1,130. That's the risk. But you're looking for a move back down towards that 330 strike, Tom.
Yep, let's break this one down. Complex four-legged spread here in the July 25th weekly cycle, selling the 375 call, buying the 385 call, short $10 wide call vertical. That's helping to finance the purchase of the 330 put calendar, buying the July 25th 330 put, selling the July 18th 330 put. So buying the 1 week wide put calendar, help finance by the short call vertical. 30-cent debit if you pay that. $1,030, as Kevin mentioned. You might have to pay a little bit more for that. But the break evens, you know, you've got two of them, right? Because you're paying a debit for this thing. So it's going to be around 355 or so to the upside. And then it'll be only 30-cent debit until that 375 strike. But then if it does fall like maybe below the 300 strike or the 290 strike, that's when you still have that risk that you paid, the debit you paid on this complex trade. You do have some assignment risk on that short 330 put that expires over the next 8 days also, so keep that in mind. But this might be the way to look at it if you think this thing is going to grind lower back towards that 330 level, but you do avoid earnings, as Kevin mentioned, on that example trade. All right, we're going to take a quick break. When we come back, we're going to take a look at Alphabet. The Google parent stock is down about 6% this year, coming under pressure from AI search competitors in this space, maybe from the AI side.
No manches. United Airlines. ¿Qué? ¿Qué pedo? Vean esto. Bastante bien, Interesante. Nucana, entonces Expansion, 2 de junio. A ver, vamos a leer esto rápido. Obviamente con inteligencia artificial, porque pues no mames, tengo un verbo de trabajo. Dame un resumen en español. Ahora acá está ya.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Alphabet, let's take a quick look at the markets, which are near session highs as we speak. Still some weakness in the tech space. 9 out of the 11 S&P 500 sectors are positive. The only two that are not are information technology and also communication services. S&P 500 up 0.2%. The Dow up 238 points. NASDAQ down 0.25%, and the Russell 2000 leading to the upside, up over 0.75%. And if you take a look at the heat map there, got some green. You got AMD doing well today. You look in the far right there, consumer discretionary is doing well, healthcare is doing well, and financials ahead of those earnings next week are doing well. So not a mixed bag, but leaning towards positive today. Now let's get into a discussion about Google Alphabet here. Kevin, this one's been a laggard in the space. A lot of concerns about, moving forward about their search business, digital ad spend. WPP came out yesterday, lowered their estimates for advertising. That might be hurting. But I think the big news here, Kevin, is Perplexity launched Comet, an AI-powered web browser, and then Reuters reported that the web browser from OpenAI is going to come into play to kind of compete against Chrome. They're coming after Google Alphabet pretty hard here, Kev.
Well, Google Alphabet has dominant positions, Tom, in search that you already mentioned, AI, streaming, cloud, robo-taxis, everything that's most important in the U.S. economy right now. Google Alphabet has a dominant position in. Yet, the stock trades at 18 times
Ahora sí puedo ver hasta las pantallas de
the
cerca. Es una
question
maravilla
is
tener
why?
lentes.
Why is this happening?
Y eso que no
Why
quiero
can't
usar
this
los
stock get
naranjas
any
todavía.
traction? And
O tal vez
again,
debería.
Tom, I pay attention to
Es que me están
headlines, and
picando los
they
ojos, me llevan.
pepper this stock with negative headlines. All day, every day, they had negative headlines that keeps this stock under pressure for some reason. And I don't know, Tom, when it'll end or what will happen, but it's amazing to me that this stock trades so incredibly cheap when they are dominant in just about everything. I mean, it's another head scratcher, Tom.
Yeah, I think it's a head scratcher for a lot of people. Oppenheimer came out with a note yesterday, put a $220 price target on it. They hiked that from $200, outperforming, and it's undervalued, they say, for the most part. And, but if they're coming after search, I think that's still a concern, and that's why the stock's still about 14% from those all-time highs that we saw at the beginning of February, while a lot of the other Mag 7 names are hitting all-time highs or near all-time highs. So I looked at a strategy here, Kev. They report earnings on the 23rd. The bar actually might be low going into this report, but I wanted to avoid that earnings event on the 23rd. If you think the stock is undervalued or maybe it's going to go higher over the next week or so, this strategy takes advantage of it. So going out to the July 18th monthly cycle here that expires in 8 days, buy the in-the-money 175 strike call. It's in the money by a couple bucks. It's got that higher delta. It reacts more like the stock. And then against it, to offset some of the costs on that bullish call purchase, sell the 182.5 strike call. So a $7.50 wide bullish call vertical, paying roughly about $2.80 debit. It's trading closer to $3 right now because the stock has moved higher throughout the session and now positive on the day. But if you pay $2.80 debit, that's your risk. $280. If you pay $3, it's $300 in risk. Pretty good risk reward setup. If you're paying $2.80 on this one, it can expand to $7.50. And if you pay $2.80 to break even, $177.80. That's less than $1 above the current share price in there. Even if you pay $3, break even is going to be $178, about $1 above the current share price. But pretty straightforward, Kevin. But you do need a move to the upside.
Yeah, the expected move in July 18th, Tom, $6. That takes you right to the 182 level, right? And so when you look at what you put on, you lined up that short strike like we talk about all the time with the expected move. Now, that's up or down the expected move. You're choosing a bullish posture on this, buying the 175, selling the 182.5. The risk is whatever you pay for it. It's rallied a little bit. It was just down on the day. It's rallied to be up slightly on the day now. But, Tom, there's going to be a day of reckoning with Google Alphabet. I just don't know when it is, right? And I don't know when these negative headlines will dissipate, but they just keep coming. And so this stock trades at a low valuation. But if it starts to recover, this trade, like I said, it's the long strike plus the debit paid is your break even, Tom.
Yep, and you avoid that earnings event. But, you know, it's all about duration. What's your outlook for the move higher if you think it's going higher, and how much duration you're going to have in that? Kevin, real quick here, no data tomorrow, but everybody should start getting prepared for a lot next week with earnings and data, right?
Whenever here's what you can count on. When there's a slow week in terms of economic data, which this clearly was, the next week will always be heavy. So, yes, CPI, PPI next week for sure will be a big one.
All right, that's going to wrap it up for us today here on Fast Market, but stick around right here on the Schwab Network. Next Gen Investing is coming up.
Ya tengo que ir a comprar más de estos.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
Moving funds. And they're building that on Arbitrum, which is a layer 2 above Ethereum. But if we're heading into this tokenization era more generally, Solana is going to be the one, in my view. They have the highest throughput for transactions, and it's not even close. Other people will come up with level 2s that maybe level the playing field somewhat, but if you really want to tokenize assets,
por ejemplo, Ethereum debería estar al alza, entonces,
that one's a lot more interesting to me.
All right.
2800, no manches. O sea, MSTR, por eso MicroStrategy, claro, está subiendo. Mientras suba Bitcoin, MicroStrategy va a subir.
Are you following the Halftime Report podcast? What are you waiting for?
Claro, ya es tarde, o sea, yo siempre digo que una vez que el precio ya lo ves en verde y así subiendo, ya es tarde. O sea, si uno lo compra, hay un riesgo ahí, cosa que obviamente no queremos. Tratamos de evitar el riesgo y hacer las inversiones lo más seguras posibles. Fentos, $25. No puede ser. A ver, voy a ir a la cartera de mi cliente. Mi cliente. Acá estás. Listo. Ahora necesito abrir mi diario otra vez. Puta, Most Used, Companies Research. Y vamos a Perplexity porque necesito actualizar lo de Ralvio Corp. Pero necesito el perfil, miren. En sí, básicamente lo que se hace es actualizar las historias o lo que sucede con este tipo de empresas. ¿Dónde está? Este es acá. Vamos a ponernos aquí. Vamos a vista. Entonces lo que hace es actualizarlas para saber qué catalizadores hay en el futuro, para que se queden registrados. Esto yo se lo pido a mi asistente. Le digo, oye, échate un clavado en la información de RLIB, porque yo no me acuerdo. O sea, es tanta información y tantas empresas que yo no me acuerdo. Entonces por eso necesito una persona que se encargue de esto. RLIB. Vamos a vista. Panel de navegación y tenemos que buscar Healthcare. Ya te encontré. Biotecnología. Healthcare, biotecnología te encontré. Okay. Y ahora la última, aquí está.
Welcome to Next Gen Investing. I'm Alex Coffey, joined by Jenny Horn. Jenny, we got a market that is a bit mixed, but it's really just the NASDAQ that's a little bit weaker here, led by some of those mega cap tech names that we talk about all the time.
Yeah, I mean, we are seeing strength today in NVIDIA, and actually, shockingly so, Tesla is also up about 2.5%, but Meta, Microsoft, Netflix all lower, Alphabet modestly higher, and Amazon down about 0.25%. So it's pretty mixed as far as then the tech coverage, which I think speaks to the 0.25% move to the downside in the NASDAQ. But green across the Russell and the Dow, another leading day for the Russell here as we see some favorability trickle into areas that are not just tech, which I always think is important in this market.
Yeah, well, and what's interesting too, Jenny, is at the very opening bell, and you never know how the market's going to go from how it opens. But I was on with Nicole. We opened things up, and one of the things that I've really been focusing on is the relationship intraday between the Russell 2000 and the NASDAQ, because it doesn't seem like those two are trading in sync. And recently, we've been trading with the Russell 2000 out in front. Now, we opened with the exact opposite. So my first thought was, hey, if this is any indication of today's intraday action, might be a NASDAQ day. And it was for about 5 or 10 minutes.
I was going to say, I think we're all rooting for that. It just doesn't seem like it's able to hold throughout the trading session, but obviously it's still been a pretty stellar month thus far, as we are now 10 trading sessions into the month of July, which historically has been a point of strength. But as always on the show, we will kick things off with our movers, a tech-heavy, or even semiconductor specifically, heavy theme to kick things off. We will also be looking at the latest technicals and example trades in Delta and United. Talk about a winning recipe today as Delta shares reacting pretty favorably to what was a mixed report, but better than feared, I think, is the tone here, which is also the rising tide lifting all boats. United also higher. We'll also be discussing a Wedbush, Dan Ives note on Palantir that he sees further upside, calling this the next Oracle as far as its AI plays. We'll also be discussing the outlook for Airbnb, and we'll close things out with the Slim Jim parent company, Conagra, fortunately lowered today on the back of dismal, I'd say, guidance was the critical note from their earnings.
Yeah, of the names we're talking about today, by far the worst performer. Down today, down over the last week, down over the last month, down year to date, that's being Conagra. And then surprisingly, which we'll talk about these with Rick, and I'm sure we'll get through it, we'll talk some of those airlines. Even with the double-digit move today, both of them still slightly below the unchanged line. A lot of the other stuff tech-dominated. Not surprising to see big year-to-date gains and just big gains in general as you go out in time. But let's get to our kind of beginning theme of the day. And despite the fact that the NASDAQ's a little bit lower, this particular part of the market is mixed, and that's the semiconductor I guess, subsector of IT. And I would say that these are key AI semiconductor players as well, starting with TSMC.
Yeah, and I know we've given NVIDIA a lot of that credit after hitting record highs yesterday, being the first U.S. company or first company to reach a $4 trillion market cap. But Taiwan Semiconductor deserves a mention too, and sales are booming as it does ride this nice wave of demand for AI processors, recording a second quarter sales of around $31.9 billion based on its latest monthly report. That marked 39% growth from the same period last year. Although this was a slight slowdown from the 42% growth we saw in their first quarter. So they did not give any details on the makeup of their sales. That we'll get more clarity on that when they report July 17th after the close. But Taiwan's growth doesn't quite match NVIDIA's, which we saw 69% revenue growth back in their latest quarter. But what is so different about Taiwan Semi? And I mean, obviously they're very different business models, but the fact that NVIDIA does still have to stave off competition in some extent, I know that they haven't really faced that, but Taiwan really commands all of the domestic high-end chip manufacturing without really much competitive threat in the foreseeable future. Intel has been trying to persuade overall the AI companies to use its facilities, but Taiwan has continued to really dominate that growth space. So asset light, I mean, one that just consistently puts up double-digit growth. There's really a lot to like about this name.
Yeah, I know it's an impressive company, and largely as NVIDIA is successful, it's hard for TSMC not to be successful because they build the stuff for NVIDIA. But NVIDIA has a little bit higher margin. And this is a high margin business for TSMC, a little bit more consistent revenues as they're just kind of a manufacturing company. So it's not surprising that it lags NVIDIA, but the correlation real strong.
Yeah, and also, I mean, NVIDIA being its biggest customer, but they also do make the core processors inside, like mobile chipsets from Qualcomm, Apple's iPhones. So it's not like they're going to just see like sole demand tied to NVIDIA, but definitely is at least a good read.
Definitely helps, though.
Yeah, definitely doesn't hurt when you have sales up almost 40% from last year. Now, our next name today is talking now some of the maybe lesser thans in terms of the performance we've seen over the year and over the last 12 months. That's AMD, which is actually, ironically, our really nice mover of the group today, up 4.3%. HSBC upgrading shares to buy from hold, saying that AMD is back in the AI game, highlighting that in their January 8th note, they actually downgraded shares on this expectation for weaker 2026 estimates for AI revenue outlook, as well as their AI GPU roadmap seeming less competitive. However, the analysts noted they now believe there could be significant upside to their fiscal 2026 estimates, driven by the revised forecast of around $15 billion, which is now 57% above consensus forecasts, which are shy of $10 billion, driven by this higher than expected pricing premium in their recent MI350 launch. So all that to be said, I think this is a really interesting way to frame AMD, saying it's back in the game, because to me, as far as AMD is concerned and following the stock, they never left. They just haven't been a competitive threat.
Well, and the ironic part, too, is if you look at the performance over the years, it did run up initially with the AI trade, and it went from like, the mid-60s, let's say, a share, which had already been a nice run up from pre-COVID, to 150 on the way to 220. But then it gave back all of that pretty much on the way down in the last year and a half. But if you were to look at its performance, a lot of those gains took place in 2023. In 2023, its earnings per share were down year over year, and its revenue was down year over year. 2024 and so far in 2025, and looking ahead to 2026, the numbers are actually starting to look pretty nice from a growth standpoint from AMD. They're not NVIDIA numbers, they're not even TSM numbers, but there's no longer a negative sign, yet ironically the stock has struggled as it turned the corner. So this goes to show that the market is, oftentimes pricing things in before they happen, looking beyond today to tomorrow. It maybe got a little ahead of itself in the first run up, but it has stabilized. It's starting to move higher again. And, to the point of this analyst, maybe it is seen as back into the game, even though to your point, maybe it's never really left.
I hope that they're back in the game. I mean, we haven't touched highs since earlier in 2024, and we're about 37% off those levels. So I think that as someone that follows the chip stocks as much as I do and the semiconductor stocks, I think I am also rooting for them to be back in the game, as HSBC put it. Now, our next name today is Micron, and I guess maybe I would have never just thought this initially from looking at this group of stocks, but Micron is actually, of these four, our best performing on the year. So up 44% year to date. The rest of the names are up about 16-17% roughly on the year. So who would have thought that Micron would be actually the leaders for its 2025 performance? Deutsche Bank initiating shares at buy, $150 price target, saying that right now they still see an attractive setup for the stock, and they are constructive on both the cyclical and secular setup facing Micron. Also, Goldman, as part of this broader note on semis today, did initiate coverage with a neutral rating, $130 price target. Both, though, do imply upside from where we're currently trading at 123. The average price target right now is 143 amongst analysts. So that does imply, about 17% upside, with the street high being $200 a share. So there is still conviction on this name, just a bit more mixed, and I think the memory chip market has been one that's challenged by some supply chain snags, and right now figuring out the best way to really balance their supply and demand.
Yeah, this is a volatile part of semiconductors. And you look at the performance in terms of just their growth. They were losing money. This is an established company in this space. They were losing money in 2023. Revenue was 40% lower in the fourth quarter of 2023 than it was the fourth quarter of 2022. But you fast forward to their most recent quarter, it grew its earnings by over 200% year over year. And it's almost, let's just say it's averaged, 50-ish% revenue growth over the last year, and it's kind of stabilized in this mid to high 30% year over year growth rate for for revenue. For context, that quarter that was down 40% was around $4 billion back in the fourth quarter of 2023. Their most recent quarter was $9.3 billion. So it's double that mark and then some. So it's back to where it was, but you look at that stock price performance, it's reflective of, are you in that boom or bust cycle? Because it seems like this memory space goes through these pretty vicious cycles.
Yeah, which is, I think, then the risk of like the consistency of some of their earnings and overall metrics. Because, yeah, I like consistency when it comes to these stocks. I like to know that we see just relatively stable, maybe boring, but stable, again, results. And our next name today has not really been maybe as a stable of a player, but it's been a nice name moving to the upside, which is Broadcom here, down about 1.3% today. We did touch new all-time highs today, but we pulled back now about 2.4% from those levels. So Broadcom continues. I feel like the story has been really impressive from like Broadcom as well as Oracle lately with their own specific news. And the street continues to pile in on this name. We did see Goldman Sachs actually initiate coverage on Broadcom, as really highlighting that both NVIDIA and Broadcom are extremely well positioned, saying that although monetization has been elusive, they do see early signs of incremental revenue and much clearer evidence of cost takeout to justify these investments, and they believe AI CapEx can sustain growth from these current levels. So Broadcom does warrant the most buys of all four of these names. 39 buys, 3 holds, no bears in Broadcom as it stands.
Yeah, that makes a ton of sense to me. Like, stock price aside, you're investing in a business and you have, if you assume it's fairly valued, I mean, there's a lot to like about this company. One, you talked about, whether it's stable or not. I'd argue for semiconductors, this is about as stable of growth as you can find. Even throughout the pandemic timeframe, it was still able to muster both earnings growth and revenue growth. But what's changed in the last year and a half is this new AI segment of their revenue has essentially opened a new growth stream that has just supercharged the percentages behind here. I mean, this is a stock that, if you were to, average or push near 20% revenue, kind of mid-teens is typically where it had been on a growth rate, pretty good. Well, now we're looking at a company that last year grew 40% in terms of its revenue. In 2018, this company total revenue, $20.8 billion. Yeah, I know that's pre-pandemic and you're going back in time, but there was no AI segment revenue then. This year alone, it's expected to push that number just in AI. So 5-6 years ago, AI is not a word that we're talking about. Suddenly now it is, and it's doubled its revenue and then some because it still grew its other core business. It's a really strong core business, is a long way to say it, and it also has this new AI segment that's growing rapidly.
No, but that's a really good point also, because I tend to not view them as I mean, now I do, but I feel like they were late to the participation of some of the AI hype because they've been transferring some of that legacy business and now focused more on AI. But it's almost like the comparison of AMD, one of the initial winners of 2024, versus Broadcom now seeing that strength trickle into 2025.
Yeah, and how I would even say that, if you're trying to frame it in a positive way, is it still has a really robust core business to fall back on if AI, for whatever reason, there's some breakthrough and it doesn't need all this fancy technology. Or if it does continue, it's still going to be exposed because it's one of its fastest growing segments. So it's kind of like I see Walmart in many ways, where Walmart's got this growth segment through AI efficiencies and e-commerce, but then it's just Walmart. It's like you feel pretty confident that Walmart's performance is going to be okay.
Yeah, and I actually think to that point, the legacy businesses, if anything, maybe some degree of cushioning if we see, I mean, like AI trade not play out the way that the bulls are expecting, although I think that we're now years in, we can say it's sort of here and here to stay. But we'll leave it there for our tech conversation to kick off the show. Coming up next, time to talk a nice move to the upside today in Delta Airlines following a second quarter that was mixed, but perhaps giving some expectations for this peak summer travel season better than expected. Shares are now up over 12%, as well as United up a whopping 15.4% on the session.
A ver, el de Grayscale, $50. $33. Miren, en la crisis, $33. O sea, estamos serían 66 a $16 de hacer una duplicación de inversión del 100%. Pero claro, de que pase eso van a ser como más tiempo. O sea, ahorita han pasado 3 meses. Mayo, junio, julio, agosto, octubre. Tal vez en 6 meses. Está por verse. Eso pone atractivo el short de Bitcoin. Porque ahorita está en 18. Pero dejen que baje Bitcoin y se va a poner muy bueno. Yo creo que al final del cierre, vamos a ver al final del cierre el corto, se está poniendo atractivo. Porque Bitcoin cada vez que sube $3,000, $4,000 retrocede y así se la ha llevado. O sea, a largo plazo por supuesto que va a seguir subiendo. Pero esos huecos que podemos utilizar justo para llevarlo a cabo.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Wow.
Welcome back to Next Gen Investing. It's now time to look at the technicals and two names flying high, no pun intended. I mean, the puns just come easy when we're talking Delta as well as United. And I feel like I even sensed a sigh of relief when I saw this move today. I mean, forget about even the report because there was still areas of pause, but a 13% move now to the upside, I think clearly demonstrates that the market alongside me was like, okay, better than feared.
Well, the fasten seatbelt light is maybe not off quite yet, to continue with the lame puns, but
they'll continue.
We can see though, and what I mean by that really is that you're right. We did clear some important levels here. 54, our green line, was a notable low point back here, and then a breakdown point after price breached our purple 252-day EMA. Then we failed to capture that level once again, but now we have cleared it pretty handily here. We broke out from the upside of our downward sloping channel shape. We had all our moving averages clustered together right on top of each other. Typically that speaks to lack of trend directionality, low volatility. But as we often say, low volatility can be the precursor to high volatility when one of these boundaries is eventually broken here. And now we can see though that price is, for now, hanging on above this red line. Low point, high point, and that's about where we are today, a bit above that 57 level here. So an important foothold for the bulls to hang on to as this trading day comes to its conclusion later today. But notice as well, very heavy volume during this push to the upside on earnings. High volume and a big move to the upside in conjunction with each other usually is thought to signify high conviction on the part of traders and gives greater credence to the move. We can also see that after RSI was compressing in a symmetrical triangle type shape, we have broken out to the upside alongside with price, RSI pushing into the overbought area, often regarded as a sign of strength in a trending market.
Okay, and I know that airlines have not seen the same degree of strength so far this year as they did back in 2024. So where do we go from here, and what else should we be watching for now in the near to midterm?
Well, as I said, that 57 level, our red line, that's a notable price level that the bulls would want to take out here. If we were to keep moving higher, there's not too much in the way of notable levels or volume. The volume really picks up again once you get here to about 60 to 62. We then have our +1 standard deviation channel, one standard deviation above this solid blue line, which is the linear regression line. So that comes in at about 62.40 or so. To the downside, our green line we mentioned earlier, 54.
Sí, ayuda a usarlos un rato,
watch
pero
if the move starts to slip. And remember, after a big breakout on a fundamental price change, it's common for a price to retreat back to a supportive area before continuing on in the current trend direction. Not saying that's going to happen, obviously, but that it's a common situation here. So we can see a volume node here just above our level near 55. And then if we were to move lower, there's quite a bit of support and other technical indicators here around that 50 level.
Okay, so a lot to like here, especially on of course, a day we're seeing such substantial momentum to the upside. So appreciate that. And now, as we do look to trade Delta, we do obviously at least have some of the expectations for the rest of this fiscal year now priced in, hopefully. And say we were looking, again, just for example purposes, for an example trade where someone was trying to utilize Delta continuing to take off to continue these funds.
Yeah, what's our favorite term we learned from George Tillis? Gap and go. So if we get the gap and go in Delta, it's maybe you still got the fashion the seatbelt signs on, as Rick said, but if you think you're going to get through some of these resistance points, continue. No earnings to think about or worry about for the interim in Delta, but looking at a call vertical spread, buying the in-the-money 55 call, selling the 60 call, all of this in the August monthly cycle to give it some time to work. It is making a big move today. Oftentimes, as Rick said, sometimes it can run into a little bit of resistance before it continues on. If that's the case, this one's got enough time perhaps to allow that to happen and still work out. Done for a 250 debit means you risk 250, can make 250. 57.50 is the break even. So looking for a move higher here, Jenny. Equal risk to reward. And thinking, hey, something shifted. This is a lot of conviction behind this move, and perhaps we're turning the page in these airlines, and clearer skies are ahead.
And people are still traveling. I mean, who would have thought? Because it was all this pessimism around the airlines and the broader tourism stocks really since we've seen some of the announcements in April. But seemingly so, this fiscal year is looking okay. And that also is the momentum lifting United today. United is actually up a bit more substantially, 15.6%. United closed out 2024, its best year on record. I mean, gaining over 100%. Now has since chopped around a bit. So walk us through the price range that we've established, although today breaking out, obviously.
Yeah, so even though these are closely related companies, both airlines, United's chart is quite different from Delta's here. And in some ways, it's stronger because you can see here, back here, after earnings, we had this other gap up. Gaps can provide us with important areas to watch here. The low point after that gap was our green line near 84. That was where we tested and then eventually broke lower. Couldn't quite make it there that time. Resistance, resistance, resistance once more. So you could repeated price level here. It also had a corresponding floor, these old highs, and then subsequent lows around 72. So 72 to 84 was a repeated range in which price zigzagged back and forth here. But now, with this news today, this sympathy move with Delta's earnings, I mean, we're at a large green candle that's near the highs of the day, handily clearing this resistance level near 84. There's not a lot of clear technical signals either to the upside to slow down the move. I mean, the next area really of note that I saw up here is 110, and that's the repeated ceiling that we saw up there near those highs. But, you know, like our last chart too, RSI momentum breaking into the overbought area on the back of this surge to the upside.
So, okay, considering this surge, we do have earnings, and now I believe it's just next week coming up. So either next week or the coming weeks, but they're definitely imminent. But what else are we watching here as we go into now? Earnings with a very different price level just based on today's move than we were, prior to today's session.
Right, and this is where our other studies can perhaps help us out a little more. Like I said, not really a ton of very clear price levels to keep an eye on going forward here, but we can see that right now we are just about at our linear regression line, our line of best fit. This is often used as a notion of fair value for traders. So by this measure, price is right about where it's supposed to be. That doesn't mean it can't go up or down beyond this point. It's just kind of, this is where you might expect to find price based on the data that we have here on our chart. If we were to keep moving higher, then volume starts to pick up again near the 95 level. So even though the price didn't cleanly trade in a specific exact range here, that's the general area where the trading was heaviest. So that's the point to be on the lookout for for potential resistance. To the downside, 84, our green line. That's the obvious place to be on the lookout for. But also, this area right here really stands out here. It's a high point and then a low point. It's our -1 standard deviation channel, long-term purple, 250 two-day exponential moving average, and the point of control. So all that's a mouthful to say it all. But around 72 to 73, a lot of technical indicators converge there. That would be a downside area of note.
Okay, yeah, and earnings are next Wednesday, July 16th. So we do have that now coming in just several sessions away here. So nice move today, now almost 16% as it continues to climb. So appreciate it, Rick Ducat, as always, for all of the technical help here. And now as we do look to trade United, for example purposes, I mean, considering that we have this massive move today, we haven't even gotten the report yet.
Yeah, I think that makes it a little bit difficult when you're looking at trading it, is because you have something that could be a setback or perhaps, give it more fuel for this move higher. But it looms in like an awkward amount of time away. And so I looked at a neutral to bullish strategy, and it acknowledges that earnings are next week, but there's not a lot of premium in these options. And so it goes out of that same August monthly cycle. Perhaps there's a little bit of correlation between these businesses. That's why you see United reacting the way that it is. And the market's making a read through saying, hey, if Delta's earnings are pretty good, maybe United's will be at least that good as well. And if that's the case, perhaps you're getting some of that move here today. Now, of course, that cannot be true, and a big, quick unwind could happen, but it's risk defined. It's the 82.5, 80 put vertical here, Jenny. Looking for at least a 60-cent credit. That means you can make $60 per spread. 81.90 is the break even on 190 in risk. So a little bit worse than 3-to-1 risk reward. 81.90 though is pretty good, almost 10% below the current share price. So you got some cushion, but you also have some time here with that event looming next week.
Yeah, and I think also a good point, because these names oftentimes trade, I'd say, in close correlation, just given that they both have these premium offerings that are right now serving them well, as it does seem those first-class upgrades are driving a lot of the enthusiasm behind at least Delta today. We'll leave it there, though, for our airline stocks. Now, coming up next, time to discuss the latest with Palantir. Now, shares are lower today, but Wedbush says they could be the next Oracle in the coming years, given their presence in AI.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with
spinoff, which was much bigger, $30 billion or so going private with Mars. CNBC out with its annual rankings for America's top states for business, and North Carolina takes the crown for the third time in 4 years. But there were also some big pops and drops for other states, and Scott Cohn joins us with some of the reasons why. Hi, Scott.
Hi, Kelly. It's a year of change. We've talked about this for weeks now as we look at the economy and the concerns about federal budget cuts and the like. And so that did jumble up our ratings somewhat. Let's take a look at the biggest drops in this year's rankings. New Jersey, Iowa, Oregon, Oklahoma, Missouri, all staged sizable drops this year. On the upside, Colorado, Delaware, and New Hampshire each jump 5 points on on workforce. For Colorado, Delaware, New Hampshire, it's about the economy. Nebraska, North Dakota, and Idaho are up 9, this year's most improved state. I think we can see the biggest upside ones before we tell you the biggest one. There you go. Colorado, Delaware, New Hampshire, et cetera, et cetera. The biggest move to the upside this year, though, is last year's biggest drop. Take a look.
What our top state study taketh away, it giveth. Massachusetts, the Bay State, surges 18 spots after dropping 23 places last year. Massachusetts still has issues, the second most expensive state to do business in, and one of the least business-friendly, but also among the least dependent on a shrinking federal government. That helps insulate the economy. Still, Massachusetts is a major recipient of federal research grants under fire by the Trump administration. The state is trying to fund some of its own research, including $1 billion passed last year for life sciences and climate technology.
We tackle hard problems in Massachusetts. Hard stuff. Wicked hard stuff, sometimes.
But it's going to be wicked hard for Massachusetts to keep that up because the money that they've passed doesn't even begin to make up for the federal research dollars that are under fire by the Trump administration. So they may have to employ more of that independent spirit if they want to stay where they are come next year. Reminder, Kelly, topstates.cnbc.com to see where your state ranks.
Meanwhile, created quite the scandal down in Virginia, which lost its crown. You got the, I think the Democrat running for attorney general wanting to come on and talk about, how the governor screwed it up. You've got the governor saying, no, CNBC, they're not taking the full, picture of federal government changes into account. Scott, you've stirred up a hornet's nest.
Well, there's a hornet's nest going on here that's been kicked a little bit, and I mean, Governor Youngkin was pretty happy last year. They've only dropped a couple of spots to 4th place. It's still a powerhouse for business, but even the governor has admitted right here on CNBC that the state is likely to lose jobs this year on net at a time when the federal the country, that is still creating jobs. And that's an issue when we're looking so closely at economy this year. It is still a very solid state. It is the #1 state for education. It does well for infrastructure, does well for a whole lot of things, but it slipped to number 14 in economy, which was our most heavily weighted category this year. They were 11th in the category last year.
All right, Scott, thanks. Appreciate it. Always fun to see the big reveal. Scott Cohn to Pippa Stevens now for the CNBC News Update. Hi, Pippa.
Hey, Kelly. The Department of Agriculture will no longer consider a farmer's race or sex in many of its farm programs. The USDA said today the move was made because it had sufficiently addressed its history of discrimination. As recently as last year, the USDA issued $2 billion in payments to more than 43,000 farmers who experienced past discrimination in its farm programs. The UN has brought into Gaza its first delivery of fuel in 130 days. A UN spokesperson said today that a team was able to get nearly 20,000 gallons on Wednesday, but warned that amount isn't enough to cover even just one day of Gaza's energy needs. And in a stunning upset, American Amanda Anisimova took down the top-ranked Aryna Sabalenka in 3 sets to reach the Wimbledon finals. The 13th seed Anisimova is heading to her first Grand Slam final as the youngest American since Serena Williams in 2004. And if she wins Saturday, she'll become the 3rd American to win a Grand Slam this year. Kelly?
Wow, you say she took down Sabalenka?
Yes.
Wow.
clearly big tennis fan here.
I used to, you would understand, but I used to have more bandwidth for it than I do now. Nevertheless, that's still a big upset, and hope she can keep going with it. Very interesting. Congrats to her. Pippa, thanks. Coming up, J.P. Morgan CEO Jamie Dimon says markets are underpricing the risk of rates moving higher from here. He says the market's pricing in just a 20% chance, but he's putting it at 40 to 50%. So we'll look at how investors should position for the second half of the year. And as we head to break, check out some names hitting new all-time highs, including Tapestry, Royal Caribbean, BlackRock, Ralph Lauren, and BNY.
Tech Check is sponsored by Comcast Business, powering possibilities.
Today is a new age.
Circle is building the foundation of our new economic system. We can raise global economic prosperity.
Eso lo tengo que cortar porque si no.
Is this your dream of retirement? How about this sweet deal? I like fishing. Or is this?
Wells Fargo. And these are huge businesses. Their market cap is higher.
Yeah.
And I mean, I guess that's right now the theme of we are looking at some of the costliest companies they've ever been. Like, to your point, this name trades, I believe it's a forward P 250 times. So I know the growth has been there. So I know a lot of times we criticize based on valuations, but then Tesla, for example, if you were, arguing at that point, then you would have missed a lot of the upside because valuations can remain stretched. There's just these names that carry these lofty premiums like Palantir, CrowdStrike are some other ones. So I know that that's even mentioned in this note, but doesn't seem to be deterring him at all away from continuing to be a pretty tried and true bull in the
Not at all, Jenny. And I have the number. This stock trades at a staggering 600 times earnings. right now. That trades like a speculative, like a crypto. I mean, that doesn't trade like a standard growth stock. So
and that goes to show how fast it's growing and expected to grow too, because on the forward basis is like 240. But this is the thing that sticks out to me, because when they start getting to those kind of numbers, you're like, okay, this company is thought of as almost like how Amazon was 5-10 years ago, where it's like it's going to have a spigot to turn the earnings on. 85 times forward revenues. That is, I mean, there might not be another. I mean, this is like beyond Reddit numbers even in terms of how expensive this stock is. But there's a belief that this stock can, continue to, exponentially grow, and it has to live up to these high bars.
I mean, certainly the analyst price target right now, average, is 89.32. So even with all their upgrades they've gotten and all of their price target increases, there is as much as a potential 35% downside risk. So there are some people who are slightly less bullish than Dan Ives is, but Palantir just continues to perform.
This is a career maker or ruiner for that space. I do not envy this. I mean, you can be Dan Ives and you just believe. And
he'll be fine because he covers 50.
But it's also
companies.
Like when you're right, you are so right, and you're a rock star for it. It's why Dan Ives, the household name in financial markets. But if you're the guy who says Palantir is worth $30 because that's what your model says, and it goes from 15 to 150, and your clients aren't involved or outright, bearish these names, I mean, you're getting fired, and that's the tough part of this business. So don't envy the job.
Nope.
Yeah, don't envy that job. But this is one where I have to commend him because this was a meme stock, and I know everyone always gets mad when you call companies that. I'm not saying it still is.
Different style, but it's same crowd. Ran in the same crowd.
It did. But like the days when AMC were popping, it was like, oh, Palantir's up, part of like the roaring kitties.
Portfolio.
Le bajé un tantito a mi silla y siento que me veo más
from Wall Street Beth.
Yes, but I guess talk about they should teach a masterclass on like reshaping perception now, because now the maturation of Palantir has really come to fruition before our eyes.
I wouldn't say that's even matured yet. I mean, it's still early days.
It is, and I will say the one. So I'm still on the meme stock. The short interest in the same has risen about 19% over the last month. That's always what I tend to check when you look at these like very frothy names. But again, it's kind of that momentum where you don't want to be standing in the way of the freight train. So it's been a really great performer to watch, and I've enjoyed the ways in which it's like massively improved the fundamental story. Trading this name, though, different story.
Yeah, and so the nice thing about trading is that you can set up scenarios with options that protect you from catastrophe, but also allow you to perform if what you think is going to happen is going to. And so I looked at a little bit more of a complex trade here. It involves 3 different strikes, 4 total contracts here. We're looking at a skewed call butterfly, with the idea being it has run a long ways, but we're in a trending market overall that perhaps you do see a move back towards those all-time highs. But as structured, in order to lower the risk, it does give back these gains if it runs through 150 and beyond. So what I looked at in particular, it's the one.
Palantir. Abajo están hablando de que si las acciones se van a soar es como bajar, pero bajar lentamente, bajar, comprimir, digamos. Palantir 142, ok. O sea, comprarla en su 128, debajo de 130 era una ganga. Va. Igual Palantir es de las empresas que considero a largo plazo para dejar un capital ahí X. O sea, así como de no sé dónde ponerlo, pues lo puedes poner. Por ejemplo, hace rato puse $300 en Sophie. Y ahí que se quede. O sea, considero que Sophie ya está muy cara. O sea, pero pues miren, o sea, al menos como que trata de subir todavía. Pero considero que esta ya está muy cara. Aunque también lleva mucho tiempo en esta área de entre los 16 y los 8. Entonces también ya es hora de que pues salte. Y vean, o sea, de los 8 a los... O sea, esto fue en abril, ¿no? En la crisis de abril. O sea, Sophie es otra de las empresas que ya duplicó rendimientos. Llegando a 16, 17, 18 para que sea 100% neto por los impuestos y comisión, va. Pero ya, o sea, Sophie ya... O sea, está bien, está bien. Está muy cara, por supuesto que sí, porque yo le considero $20 su valor intrínseco, se está sobrepasando un poco. Pero igual y mañana la vendo mejor. Porque ahora que veo el gráfico digo, meh. O sea, por mí ahí lo dejo un año. Pero podría encontrar algo mejor, como Palantir, aunque ahorita Palantir sí está muy cara, claro. O Sophie. Y así, Lauder también es otra. Es un buen negocio que a largo plazo tiene buen futuro. Entonces ahí se va a quedar. Estaría.
rise in the unemployment rate and a rise in inflation. But if it's not as bad as people think, then let's start talking about 2026 already, right? Exactly. And now you start to think about operating leverage. The tariff, which is maybe that one-off price shock, inflation then starts to come down. We're in a very, very different ballgame at that point.
I like it. Just going to leave it right there, Jim, on a very, on a positive, and a constructive, and an upbeat, whatever you want to call it. On that note, Jim Caron with Morgan Stanley. We really appreciate it.
Thank you.
Coming up, keep an eye on some of the Brazilian names: Mercado Libre, Embraer, New Holdings. They're down after the president's 50% tariff threat on Brazil, but there are some other ripple effects that could also hit consumers here in the U.S., and we'll run through them next.
Only the ServiceNow platform connects every corner of your business, putting AI agents to work for people.
Like secret agents?
No, more like autonomous minions that you control.
To do what?
Well, Jim's agents resolve simple customer issues, and Patty's agents flag network problems.
Proactively?
Yep.
I'm loving my agents. Wait, do you all have agents?
Oh, yeah. And on the ServiceNow platform, everyone's agents work together, so everything works better.
Could I have agents?
Maybe.
This July at Renewal by Andersen, replace your windows, your patio doors, or your entry door, and we're going to give you an amazing opportunity. You ready? Pay nothing, and I mean zero zilch nada, for 18 months. Just to be clear, that's a year and a half. I'm talking about no money down, no monthly payments, and no interest until January of 2027. We don't know when we'll be able to offer this special financing again, so get in on this while you can. And did you know over 60% of all our customers choose to finance? It just makes sense. But hold on, why choose Renewal by Andersen in the first place? Well, we use an exclusive window frame material. It's called Fibrex. It never needs painting. It's twice as strong as vinyl. And it was designed to handle extreme temperature swings while repelling moisture and the elements. Speaking of the elements, summer brings warm weather, and warm weather brings bugs. Lots of them. Beat it, bugs. Not on our watch. Our patio doors are designed to slide easily. They're not going to stick and let the bugs in. Replace your windows, patio doors, or your front entry door, and there's no money down, no monthly payments, and no interest until January of 2027. Get them now and pay down the line. And how about this? Andersen products will increase your home's value by 15%. It's true. Get out your phone, plug in your home's value, and multiply it by 0.15. That number could pay for your new windows. Now that's what I'm talking about. Book a
Era al revés, lo siento.
Collection, which is a curated brand to help deliver to the guests properties that deliver at a very, very high level.
Okay, so I'm curious about, obviously more on that, because I do think there's been this very interesting theme of consolidation. And as we know from travel, and especially like when finding lodging, loyalty is so huge. And what the hotels, the major hotels chains can offer is these various like rewards programs, and they have these repeat, like there's Marriott customers, I feel like, that are proud to tell you that they stay solely at Marriott. So how do you then dive into a space that is fairly already loyal and fairly saturated with these like mega chains being, your Marriott's, Hyatt's, your Hilton's?
Great question. And so, if you think about it, the airlines and hotels back in 2010 mostly were freaking out because they were losing their market share to some of the online travel agency platforms. So Marriott, the program that you're speaking of, that loyalty program got that much better to bring consumers back to their direct platform. Same thing with Delta Airlines, my favorite airline. Absolutely loyal. I'll fly just that airline. That, again, it doesn't exist within the vacation rental space. And so what you're going to see and what you are seeing right now between a couple different platforms, and soon to be ours as well, is the fight for loyalty, bringing that consumer back so that they can actually compete with that hospitality.
Two-part question for you here, Travis. First off, has the transparency rules that have recently been implemented helped this space? And secondly, are we seeing an over-leveraging in certain markets, maybe a Phoenix that can create kind of the boom and bust cycles of real estate?
Yeah, I mean, there's definitely an oversupply within the space, in the vacation rental space. I mean, what you're when you look at it, you have to kind of look at it in two different segments. You have to look at it from a professional standpoint or the online travel agency standpoint, like Airbnb or Vrbo. Anybody can put their property onto that platform, and that's what's exactly happened during the COVID years. We saw an absolutely huge spike where the industry essentially doubled. That has since waned as Americans have started traveling, overseas again and over on cruise ships, and so we're not making the same money, and there's not the same demand. And so it does vary from market to market. And then, especially with this year, depending on the location, geographic location of where the consumer is coming from or the guest, you see a lot of these northern markets where they're impacted from Canadian travel or European travel throughout the country right now.
Okay, and so in regards to the 100 collection, I mean, we talked about the airlines earlier on the show, and I think what's amazing is the way Delta is so much driven right now by that high-end consumer who can pay to upgrade to first class, and it's also been a theme that just has affected the broader travel space. So serving a more high-end consumer, is there a resiliency there? Because frankly, it does feel like the travel space is propped up by those that doesn't really matter about the market or the economy. They still have that appetite and willingness to spend.
And the data supports exactly that. And so what we see is these curated properties, the higher end properties, these more unique properties, the creme de la creme properties, or the way I like to put it, the Michelin star properties, or AKA the 100 collection. These properties are doing great. They're actually doing well, and they are absolutely outliers from the overall market. But where you see these properties that were just, potentially second choices, third choices, or fourth, they're starting to wane. And so it's a lot like the first class seat, if you will. Everybody wants it. And so we're seeing still record demand, if not some better numbers than we saw last year for that specific inventory.
Travis, final question for you. As someone who has a front row seat to this business and has watched it evolve over the years, where do you see this going? You talked about the professionalization of it. Is that a continued trend you think is going to continue to play out?
Absolutely. And so I think you saw some really big things happen this year. You saw, you saw the Casa, which was a company that went public for $4.3 billion, just get taken private by a franchise group called Casago. Absolutely love what they're doing, but again, increasing the professional standards and going back to kind of the hotel space. I mean, if you think about Marriott with their 32 different brands that all have different meanings with each brand, I think you're going to see the same thing in the vacation rental space, where these brands start to mean something to the consumer versus just an online platform that may not have a standard there.
Yeah, and I think that's even what we've seen play out at Airbnb, where there's this vast loyalty because it's more of that experience, less just the place that you go and stay. And so someone that does enjoy to travel, this makes me definitely want to get on a plane and go somewhere. But we so appreciate it and appreciate your time today. Wonderful insight on the overall travel, short-term, long-term rental, and hospitality space. Travis Wilburn, the founder of the 100 Collection. Now coming up next, last but not least, it's time for Under 30. And unfortunately, closing things out on one of the more pessimistic notes of the day, Conagra taking it on the chin here a bit after they did say in response to some of the recent turbulence, pricing still remains a concern. Inflation is still hurting their consumers.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Ok. Sí, que se quede es para largo. Son 402, ya está la comisión.
Welcome back to Next Gen Investing. It's
listo.
time for Under 30. And today we discuss ConAgra Foods, which interestingly enough,
204.
headquarters used to be Omaha, Nebraska. Now it's moved to Chicago, similar to myself. Joining us now, Schwab Network contributor Sam Vadas is here to discuss the processed food company. Sam, ConAgra Foods, I think, is one of those big companies that does something important that just never really gets thought of. But then, once a quarter, it makes some news and we talk about it.
Yeah, that's exactly right, Alex. I was having the same sort of thought myself because, we all eat snacks, but, 52-week low today, not a great day for the stock. We are seeing it down 3.3%, currently at $19 and change. The stock briefly actually dropping below that $19 level, which I believe is about a 13-year low now, and this coming off the back of this earnings miss and also the weak outlook. So that's certainly putting a bad taste in the mouths of investors. Let me run you through the numbers as you've got up on the screen here. Adjusted earnings of 56 cents a pop versus the 58 cents that analysts had been anticipating. Sales of $2.78 billion versus what the street was expecting at $2.84 billion. And also, as I mentioned, the weaker outlook, expecting adjusted earnings between $170 and $185 a share in fiscal 2026. That is below the $218 a share that analysts were expecting at the midpoint. So the quarter, clearly, as the company has pointed out, certainly in its accompanying commentary, more challenging than they had anticipated, and they don't expect things to get much better. If you look at some of what they've been saying, they're anticipating significant challenges on the horizon too. They put this down to a number of things: higher than expected or anticipated inflation, costs. That's all weighing on the minds of consumers, so it really is the sentiment as well. We've also got the supply chain situation too, as well as some Forex headwinds. They've also cited tariffs in this as a potential challenge. I quote them saying that the current tariff environment is expected to add approximately 3% to our cost of goods sold, or more than $200 million annually. So very much has been a disappointing time for ConAgra, and I heard one analyst sort of suggesting that things are going from bad to worse. So we've seen mounting pressures here, and certainly as far as the supply chain issues are concerned, a lot of this is to do with the protein, the chicken, high prices weighing on sales and margins. They're also, as I mentioned, dealing with the macroeconomic uncertainties as well. It really comes down to consumer behavior and trends. As far as the stock is concerned, one of the worst performing staples. I heard the Bank of America analysts talking about this recently, talking about how obviously the largest category for ConAgra is in those single-serve protein meals. So they do expect this company to have limited pricing power. That's going to be putting pressure on the margins. That seems to be echoed amongst a lot of the sell-side analysts. As far as the price targets, recently RBC a hold rating price target of $25. Evercore ISI reduced this as well, a price target of 26 from 31 bucks. They're also talking about tariffs, commodity inflation as well, combined with the limited pricing power. There's that line again. Also noting that they do see continued growth potential in certainly the snacks and frozen department, which makes up for about 65%, as I mentioned. They are going to be waiting for what the company says about innovation and marketing to strengthen some of that volume as well. So, as I mentioned, shares under pressure today to the tune of 3.3% at 19 bucks and change, guys.
Yeah, and I think that, if anything, reflecting a lot of what we feel from a consumer standpoint at grocery stores. I mean, it's still, I know we talk about inflation coming down. It doesn't feel that way, at least from my perspective. And I'm like single-handedly supporting their Orville Redenbacher's business because I eat so much microwave popcorn. But on that note, we will leave it lower today, of course, but we appreciate the commentary. Sam Vadas, contributor here on the network. And we close things out a lot of where we started about an hour ago. The big improvements here in the NASDAQ, which you could see turn positive. Don't hold your breath, but things looking to be firming up on the session. That'll do it for Next Gen Investing for this Thursday. We have the watch list coming up next.
0.26. Listo. Después ya se rechazó. Luego sí fue la compra de Sophie para ver dónde colocábamos el capital. Sophie
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24
Y ya se cae en ese, sigue subiendo, ¿no? Solo me falta eso.
No matter the hour.
Sácate.
You can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all.
Quiero comprar una de Secret Labs, pero ya las vi, están como 6,000 pesos. Si todo sale bien, tal vez de Navidad. Emisora mercado, ajá, ok. No quiero eso. Buy y la comisión 0.79 y listo, fue compra. Ok, después de Sophie se vendió SBET. Ok, es que SBET se vendió ayer, ajá, fue sell. Y del spread, o sea, fueron como $5 de ganancias.
Good afternoon. Welcome to the watch list. I'm Nicole Petalides on a record-setting day on Wall Street. Glad you're with us. Stocks have shaken off the morning worries and moving higher throughout this day. We have a lot to cover. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We are live at the New York Stock Exchange, and so glad you are with us. Right now, as I look at the numbers here on the big board, I can tell you that the Dow is up about 288 points. The S&P 500 is up 23. And we also see that the VIX is at 1579 and the 10-year bond yield at 435. So that's the big picture here. We also have names like NVIDIA and Broadcom hitting some record highs as well. So that's certainly worth noting. We will break down the latest bullish signals for the S&P 500 and the NASDAQ, plus top sector picks like cybersecurity, semiconductors, defense stocks. We have guests for that. We'll also discuss the outlook for the upcoming second quarter earnings season and what it means for market momentum heading into the second half of the year. Later, a deep dive into the impact of tariffs, inflation data, and jobs reports on the Fed's policy path. So we'll have a lot to discuss. So as we said, the markets are higher. We saw the NASDAQ hitting new highs, the S&P 500 also now at new highs as well. So a record-setting day, as I noted. Oil and gold are mixed. Gold is up $5, while oil pulls back almost $2. Kevin Hanks, host of Fast Market, is here with me on Schwab Network, and we have a lot to discuss here. I know you have the Kellogg news.
Yeah, Ferrero is the Italian candy maker. They make Nutella, they make Tic Tacs. They're buying Kellogg, which is the legendary cereal maker. Fruit Loops and Raisin Bran and Apple Jacks and most every breakfast cereal that your children or my generation may have used. They're buying them for about $3.1 billion. That stock, call letters KLG, is currently up 30.5% on the day, up to $22. So big move there, big takeover in the consumer staples sector, Nicole.
Yeah, big news there without a doubt. How about we take a look at what's been going on with NVIDIA? I mentioned the new highs again.
Yes, hitting $4 trillion. Think about this, Nicole. Now, NVIDIA has the market cap the size of Meta Platforms, Berkshire Hathaway, and Tesla
Acá ya fueron títulos 22.47 y fue un precio de 1.46, creo que igual que hace rato, no, 1.49.
So hit $4 trillion yesterday, backed off slightly, back above there today, trading safely 160, right at 164. We'll see. I fully expect, my history tells me that this will be a busy level. It'll attract a lot of order flow, and there'll be some give and take around this $4 trillion level because humans like big round numbers, Nicole. So I would expect this number to sit for a little while. Remember, as we get into large cap tech earnings in the next couple weeks, NVIDIA's not for another month or so.
No creo que llegue a 4,
it'll be a while before we get their earnings, but $4 trillion, certainly an incredible milestone for NVIDIA.
Okay. Do you have a big picture thought?
When I think of its effect on the market, I think it's interesting. Remember, we start earnings next Tuesday with the banks. We've already had Delta come out with earnings. Banks and airlines start earnings season. The bar was relatively low for some of the airlines, and they've done a great job of beating numbers and raising guidance and giving good guidance for the rest of the year. Banks are going to be different. Banks all got downgraded this week ahead of earnings next week, so that bar is going to be a little higher. So it might be a bumpy start to earnings season, but it'll certainly be fun. Then we get into large cap tech, and that'll be heavily influenced by AI and CapEx spend, and NVIDIA will certainly be the beneficiary of all that. So when those CapEx numbers come out from Meta, Microsoft, Tesla, all those names, it's going to be big numbers, Nicole.
Yeah, understood. Kevin, it's so great to see you. Thank you so much. Live at the CBOE for us every single day. And today we climb this wall of worry. Some people think that, there's a little pain in the market. Maybe some things are overvalued. But regardless, you are seeing new highs. I want to continue to talk about the big picture. Mel Casey, Senior Manager portfolio manager at FBB Capital Partners, is with me. Your thoughts on the current environment and what's propelling this market to record highs?
Hi, Nicole. Thank you for having me on. Yeah, we're back to all-time highs again. I think a lot of it is investors choosing to look past some of the tariff talk and look at an environment that's just good enough, basically, for the macro. We had good earnings overall for the market in Q1. We have lower expectations for Q2 to hit. And we just got tax legislation, so there's a little more certainty on that front. And all the hard data is just showing that everything's hanging in there. The job market, CPI is gradually, staying within this reasonable range, still above target, but reasonable. And there's greater conviction that we might get some reasonable interest rate cuts maybe in the fall. All of this seems to be driving this positivity.
Okay.
So you feel like there's a lot more. Look, we'll get more on inflation next week. Do you think the Fed should be cutting right now or not necessarily?
¿Quién sigue?
I think it's understandable why they're being pretty cautious. There's a lot of uncertainty out there in terms of monetary policy or fiscal policy, I should say. There's a lot of big tariff numbers being thrown around, and the impact that's going to have is yet to be seen. We haven't seen the numbers, like I said. But it's really hard to thread that needle. The worst thing, I think, from the Fed's point of view is to see a overheating economy based on doing something too drastic. So I think nice and easy and gradual, it makes a lot of sense.
Yeah. So where are the opportunities? I mean, is it at home and international?
I think
Me choca que mi cara aparezca en mi Apple
we
Watch.
favor U.S. over the long run. We think the
a
S&P
ver acá.
500 overall is a little bit
10 de
overvalued
julio.
relative to its
10 de
history.
julio,
So we want to see some more earnings delivery there
Aquí
to
estás.
justify the current valuation. But over the
PTHL.
long run, we feel pretty good about
Ya estás, nada más
favoring
falta
U.S.
la
What we are
comisión.
seeing, which is a little bit different in
Comisión de
2025,
casa de bolsa
is the
0.21.
international opportunity looks a little bit different. We've always enjoyed looking at individual stocks for international, but the actual broad indices are looking more attractive. Traditionally, the sector composition has turned us off a little bit because it's a little bit more value oriented than US. But there seems to be a repositioning. We've had kind of start of the year with kind of austerity in the US, but more stimulus in Europe. And that seems to be a rising tide over there. And you can see that in the performance year to date for developed international.
So which sectors do you think, you talked about growth, innovation, your sector composition within the portfolio. What do you think might really work in a portfolio with U.S. stocks?
I think
Ya son las 12, gente. O sea, se los juro, no puedo creer cómo pasa tan rápido el tiempo. O sea, yo estoy aquí desde las 7:30 en putizas, escribiendo, haciendo, deshaciendo, y ahorita ya son las 12. O sea, es... Wow. Ni en mis trabajos de empleado se me pasaba tan rápido.
Overall mix, which helps us through times like April, as well as times like this.
When you think about the Mag 7 names and someone asks you about those kinds of names, what do you tell them?
That the Mag 7 performance speaks for itself, but be careful about low breadth markets. When so much of your performance is coming from 7 names, that generally doesn't portend well for the next 12 months of return. We prefer to see a more breadth in the market, more broader participation. We're starting to see that a little bit in 2025, in fairness. But, it's important to think about diversification. And these names with a lot of excitement can go out of favor pretty quickly. We've seen wild moves in a name like Tesla, for example. So we certainly want to be exposed to things like AI, NVIDIA, Microsoft, Netflix. We own all those names. But,
por supuesto que sí, habrá más tratos ganados, por supuesto que sí, porque el TQL es una maravilla este ETF. O sea, es una maravilla, es la esperanza. Fue la esperanza y el levantamiento de muchas carteras de inversión. Es esta madre, comprar en 35 y holdearlo hasta la fecha. O sea, es lo que les digo, el TQL es el mejor producto para mí del mercado, incluso mejor que el Nasdaq. Vamos al Nasdaq.
And that's making a lot of, it certainly helps U.S. companies from one perspective, but it is helping a lot with some of the international performance that we're seeing this year. So something to watch out for. We've seen periods where international has done better, and it's only been shorter periods, and then it's mean reverted. But it's further evidence that maybe this time is a little bit different.
Yeah, and for the international plays, is there something you lean towards at this time?
Like I said before, I think the broad index investing is looking more attractive than it was before. But in terms of throughout the cycle, when we can identify unique companies, I'm thinking of a Dutch company that we've owned for a long time, ASML, tethered quite strongly to the AI because they actually make the machines that you use to make the chips. So it's a unique business. So when we can identify companies like that, we're kind of indifferent to where they're headquartered. But at the same time, the overall markets look like they have the wind at their back in 2025.
And for asset allocation, you know, your thoughts, is it the 60-40? I mean, what should be happening right now?
Well, your specific asset allocation will always be driven by your circumstances, your age, what stage of life you're in. But if it is 60-40, don't let it run to 75. Don't let it run, you know, too far past. So we've really been focusing on discipline in 2025. Stocks are expensive. The other side of that equation, bonds are cheap. And we're still getting really nice yields. We can project that pretty nice 5% return from bonds. We would have been delighted to see that for many, many years. Now we're actually seeing that. And so it's a good time at all-time highs to just not get out of stocks, not get scared out of them, but just make sure that you're where you should be on your target and not let that run too much. Because you actually do have an alternative, which we didn't have prior to 2022.
Mel Casey, Senior Portfolio Manager, FBB Capital Partners. Thanks so much for being with us. Coming up next, Options Corner. Tom White joins us and highlights unusual options activity from the day and how investors are looking to trade on recent news of United Airlines, Norwegian Cruise Lines, and also Coinbase. We will be right back. Keep it right here on the Watch List on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Ok, creo que ya arreglé lo que tenía que arreglar. Ahora los movimientos. ¿Quién me falta? Cell. Tengo que agregar esa compra. No, ya no. Ah, sí, cierto.
Trading the trending names every day.
Estás?
I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Ok. A ver, esperemos. ¿Dónde estás? Aquí estás.
Welcome back to the watch list. Right now, the Dow's up almost 300 points. The S&P 500
Bien,
has hit record highs.
necesito ir a la cuenta de
to
Cell.
discuss throughout this hour. But
Claro,
first,
Cell.
options corner. Everyone
ya te
wants to
encontré.
see where the unusual options trades are,
vamos
and we
a
have that for you.
buscar,
Tom
aquí está.
White, host of Fast Market here
Esta
on
ya
Schwab
estaba, ¿no?
Network, combs through and finds
Compra,
real
la comisión
options
también ya
trades that
está,
he's
listo.
found. And we've seen the airlines
es lo
leading
único
the
que tengo,
S&P 500
sí.
today, Tom. And you, in fact,
8 de
found
julio.
a United Airlines trade that's bullish. We'd like to hear more about that.
Yeah, United Airlines, all the airlines are popping on the back of Delta's results. It almost gives you a sense of relief here, Nicole, because recessionary fears have gone, out the window. The tariff impact is kind of getting brushed aside right now. Job market's still robust. People are still out there spending. GDP estimates are starting to go up. So everything's kind of falling in line. Remember, United Airlines hit all-time highs in January. It's still down about 19% from those levels, but having a nice big rebound off of those April lows since the market kind of bottomed out here. And Delta's earnings kind of was reflective of that they reinstated full-year guidance for the company. They raised their dividend, so they're getting more confidence in the economy as those recessionary risks kind of wane and people continue to spend. And this is good for these consumer discretionary type of stocks that we're talking about here with United Airlines. Now, they don't release earnings until next week, so we'll get some more clarity for them. But they're probably the biggest competitor, in alignment with Delta as far as they're doing well on the premium side. International travel has really picked up. And business travel has also picked up. That luxury segment's been doing really well. And United is usually one of the first airlines to cut capacity. Delta said they will in the fall because they've seen weak coach or economy sales. So they're going to start cutting capacity. But United will probably do the same also if they see any weakness on that side of their business. But we did see some bullish activity, not surprising. Not only in United, but across all the airlines. Saw a lot of call buying, but one that stuck out to me was in the July 18th, the 90 strike calls. You're going to capture that earnings event, this trader is. Traded about 4,000 of those 90 calls for an average debit of about $3.90 earlier on this morning. The break-even 93.90 over the next 8 days. We're basically right there right now. Call volume, 7 times normal daily average volume that we've seen over the last 5 trading sessions, Nicole. So, yeah, a lot of bullish activity in all the airlines, including United today.
Yeah, and as you said, so much of this kicked off when Delta CEO just talked about the demand and how good things were looking. I mean, it was certainly a surprise the way, because especially when we've heard so much about domestic flying and that was less attractive and people were worried, and this came out sort of, and maybe we'll see more surprises throughout earnings season. We will see. Yeah. And then we'll see how much they'll be spending on their cruise trips. I mean, we've seen many of these cruise lines doing so incredibly well. People feel like they get a lot of bang for their buck. But what do you think about Norwegian Cruise Line here? You found a bullish trade.
You can almost overlay the cruise line charts to the airlines, right? They were struggling a little bit after hitting, multi-year highs earlier on this year. And that's due to those recessionary fears, pullback in consumer spending. But we're seeing a nice pop in Norwegian and all the other cruise lines today on the back of Delta's airlines. And they almost gave like a microcosm that the economy is not doing poorly and it's going to start doing better. Still down about 10% so far this year. So it's not quite back to levels that we saw in early January. Broke its 200-day moving average to the upside also. And then concerns about recession, consumer spending, the conflicts in the Middle East, travel. Those are kind of getting pushed to the side as the stock market's making all-time highs. They've got some new ships planned, over 3 of them. They're going to start doing river cruises. Barclays just recently, yesterday, raised the price target to $25 from $22 ahead of their Q2 earnings, which are expected to be better than expected. Remember, last earnings, they kind of lowered their guidance. Capacity basically was at 101.5%. That was a little bit below from year-ago levels, so they expect that to turn around, according to Barclays. But we did see some bullish activity in this name also. Out in the September monthly options, So about 71 days till expiration. Trader bought 12,500 of the 24 strike calls, paid an average debit of nearly $1.50 on those. So the break even of basically $25.50 over the next basically 2 months is about 10% above the current share price. So they're giving themselves duration on this one. They did sell out of a long position that they had on the September 22 calls. So they sold those, took some profits, and raised the strike price a couple dollars with the expectations that the stock's going to continue to move higher. And call volume in there is about 3 times normal daily average volume. So if you look at this across the airlines, cruise lines, travel stocks, hotels, all doing really well based on the fact that Delta's earnings were pretty well.
Yeah, and I mean, they're trying to get the vibe and hope that people will be spending after all. That's good, at least for this day and this moment. So we'll take it for those bulls out there. Last but not least, we did see Bitcoin hitting new record highs, crossed 112,000 in the last 24 hours. And Coinbase has also done particularly well. When I looked, I saw some analyst calls that were higher. I also saw a double downgrade to a sell. There was a lot that went on. And at the same time, you have a bullish trade that you'll share with us.
Yeah, the stock's been doing really well. It's about Bitcoin late yesterday hit all-time highs above 112,000 per coin. A lot of the other names within the crypto space have been doing really well. The stock's up over 50% so far this year, near over 3-year highs. But then H.C. Wainwright analyst comes out, double downgrades the stock to sell from buy with a $300 price target. That's sticking your neck out there a little bit, Nicole, for this analyst. He said the stock's valuation has outstripped near-term fundamentals.
Porque el Labo también es un producto a buen largo plazo.
The 150% rally that they've seen off of those April
Estaba en 32,
so
igual
lo... No, if Bitcoin continues to move
35.
higher, the correlation between...
Ok, va, 40. 40 y 40 son 80. Ya está cerca de duplicar su inversión. Pero es que de 40 a 67 es ya casi un rendimiento del 50%. O sea, no está mal. Aparte el Labu, ojo, ha llegado hasta los $150 a largo plazo. Y largo plazo pues pueden ser 4 meses, 8 meses, un año. Y ahí tienes mínimo el 20% de tu inversión, mínimo. Así que no hay tema con eso.
Is above $406.80 over the next week. That's about 6% above the current share price in there. Put call ratio, even, the stock's up today on the downgrade because maybe the market's up. There's been a lot of bullishness in crypto. Put call ratio is only 0.38. A normal put call ratio is about 0.7. So yeah, a lot of call buyers in here, but some put activity also. Yeah, this trader thinks we're going to be higher over the next week.
Yeah, thanks for sharing all that and that downgrade from a buy to a sell. On the same 24 hours that Bitcoin hits record highs. I mean, I would understand if they said take some profits, we go to neutral. Yeah. But they didn't. They went to $300 and I mean, that was definitely sticking their neck out. Yeah. So we'll see. Tom White, great to see you. Thank you for taking a look at United, Norwegian, and Coinbase for us in Options Corner. Still ahead, folks, Tina Jalbert will join us and talk about Ferrero's bold $3.1 billion move to transform the American breakfast table when the watch list returns.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade. giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly
Renaciendo
with
de las cenizas, pero ahí va.
It's
Bueno, y ni tan
interactive
cenizas,
learning at its finest.
con un mínimo de
Tune in live or watch
2.93.
on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. Another couple hours till the closing bell. We have a lot to talk about. Dana Jalbert's with
En hora y media
us, CEO of Align
cerramos.
Business Advisory Services, is here to talk about the deal with Kellogg, with Ferrero acquisition. It looks like they are interested. It looks like the back half of the year, and that we may hear more over the next week. I mean, how likely is this to really happen?
I think it's pretty likely. There's a lot of synergies here. It's a real opportunity for Ferrero to continue on its U.S. buying spree. They had prior had a $2.8 billion acquisition of Nestle's U.S. chocolate business. So this is very much in line with that. And I think we'll certainly plow ahead. There's quite a bit of market share that they're looking to gain and helps them diversify their portfolio of products. So, I expect them to march on full steam ahead.
Yeah, I mean, it certainly seems like it's going forward, at least at this point. Happened 3.1 billion. Happened 3.1 billion. Do you think the price is right?
It's a premium for sure, but the market seems to like it, at least as we sit and talk here today. Is certainly a premium, but this is, you're talking Kellogg's. These are brands that are beyond well known when you think about consumer retail products and branded products.
Con esta inversión estoy salvando el portafolio de un cliente. Bueno, salvando en el sentido de que llevo una semana a la baja y no me gusta eso. O sea, siempre tiene que, procuro que siempre estén como de todos los activos que tienen en sus portafolios, que la cartera está como en 3%, 4% en peso por activo. Es decir, que del 100% pues multipliquen. Supongamos que fuera un 5%. Entonces hay 10 inversiones. Hay 20 inversiones, es decir, 20 activos financieros. Entonces lo que procuro es siempre que varios se estén moviendo al alza, siempre. Y para eso hay que estar buscando los activos más baratos del mercado, siempre comprar cuando están cayendo, es mi regla. No compro ya cuando están subiendo, Tesla no lo va a comprar ahorita. La compré cuando estaba en 2.93 hace como 2 semanas y ahí sigue. Yo espero que llegue a 350 este mes si el rally continúa.
And when you talk about Ferrero, I mean, people know they have chocolate, those Ferrero Rocher chocolates, very popular. I think they also have Nutella. So it really does have the synergies, I guess, with things that we eat and such. Do you think they were considering a different company? Because earlier this morning when this broke, I quickly checked something like General Mills. And while Kellogg was up 30%, General Mills was doing a lot of nothing. So maybe they were talking about this in the back office and they won't really be looking for more, and they do think that the boards will give the approvals. I don't know how long from, it does say second half of the year. I mean, you got to get the approval of the boards and such, but it doesn't look like they were looking elsewhere.
I don't think so. I think they were very specific and intentional in their strategy. They're really looking to diversify their product portfolio here. As you mentioned, they have a good holding in chocolates and snacks. But when you look at the price of cocoa and the tariff challenges that I'm sure they're having globally, that this is a way to diversify and grow a well-known and well-established U.S. brand. And they're also diversifying in an attempt to shift and pivot pivot amongst changing consumer demand. We talk about Fruit Loops and Cracker Jacks and the more perhaps sugary cereals, but they also own Kashi and some of the more health conscious brands, which when you look at your demographics, your higher income households are going to be less price sensitive and more health focused. So they're going to stray less from the sweets and the candies and the sugary things. So that's where I think some of these more health conscious brands that Kellogg's has could lean well in there. Similarly, your lower income or middle income households, they're a little more value orientated. And so, but the brand matters. And so I think they're able to capitate the households in both of those demographics by diversifying their portfolio products. So I think it's a geographic market expansion play, but it's absolutely a portfolio diversification. And I think they were very intentional about pursuing Kellogg's specifically to your point.
Yeah, they also have, I know you mentioned the Kashi brand as people are being more health conscious, and this is going to become a health conscious question about some of these staples overall. They also have Pringles.
12:30 ya tan rápido, no lo puedo creer.
Pringles and Cheez-Its. I love to eat Cheez-Its. You go to your registered dietitian, they don't necessarily recommend those. They're really so be on this kick of less sugar and a little healthier. What about all the names? You have Nestle, Kraft Heinz, J.M. Smucker, ConAgra, General Mills, Kellogg. Are they all? They're all going to see fewer sales because America is trending more to protein and vegetables.
Well, I think there is definitely some truth to that, and you can see it in all of those organizations that you just mentioned have been going on an acquisition spree. They've all been buying, and they're all diversifying their product portfolio. I think the one thing you notice is that these foods are shelf stable, and so right, wrong, or indifferent. While they may or may not be the most nutritional, it is the snack that a lot of folks often reach for. They are able to sit in your kid's lunch without going bad. If the power is out and you don't have access to fresh foods, those are always there. They've been, these types of snacks have been around for some time. There is as I mentioned, higher income households, I think, have more of a health focus because the cost of healthier foods obviously is much higher. And so I think the Cheez-Its and the Pringles and the cereals of the world are going to continue to have significant demand. And that's what these companies are banking on. And that's why you're seeing them buy, and diversify their portfolio with these types of snacks and products. I think you're also going to see a lot of investing in healthier alternatives too. I think they want to have a vertically integrated portfolio of all these different types of snacks to be able to offer globally, because you also have to look at your global markets will have different tastes when you look at international focus.
People, there's no doubt we're all supposed to be cutting with less sugar and less carbs, but
de veras que iba a llover, ¿no?
You have the right to eat whatever you want. And, and so people love to have all of these yummy foods, and that's where it all comes in. I know that Ferrero bought that
sí,
ice cream
no
company way back. They've been making
Bajo la
acquisitions and getting bigger and bigger, so they have a variety of things to put out there. What about the price point, and pricing power? Is that an important part of the story? How much can you really raise the prices? To buy ice cream, here in New York City, if you want to try and buy some ice cream, it's all locked up. You got to call somebody to come in. And actually, if you want Oreos, those are locked too. Because you can't get anything. But, price, I'm sure ice cream's very expensive, I think.
Yeah, I think what you're seeing is between the tariff pressure, rising interest rates, the cost of, inflation, the cost of everything has gone up significantly. So buying a pint of ice cream, and especially a niche private label, well, it's not private anymore, but Halo, top is more truly more discretionary perhaps than Bluebell, who they also acquired, right? And so the way they look at it is they have both types at both price points to meet the differing consumer demand depending on whether they're a higher or middle or lower income household. So they want to be able to have as much breadth and capitation of the consumer wallet that they can get. And the only way to do that is by having a widely diversified product portfolio that really attracts all of the different tastes, to your point. And, we have started to see some food price de-escalation. I think as the year goes on, and if we continue to see interest rates go down and some of this tariff noise start to settle, or at the very least, an ability to navigate through the changing tariff landscape and having it be more the norm than perhaps it was at the first half of the year, I think it's going to give consumers more relief from a pricing perspective, and I think prices will come down. And I mean, food and beverage is a low margin business, so it really is about volume. So hence, M&A is a way for these organizations to buy, and Kellogg being a really good example of that, of buying more volume, buying more market share, buying more geography, and being able to grow the business in an environment where margins and pricing is going to be tight. So instead of going deep with higher prices, they're going to go broad with a wide variety of products in their portfolio. And I think that's the trend you're seeing, and I think you're going to continue to see it throughout the year.
Dina, thank you so much. It's wonderful to see you. And we covered a lot in these food group and staples and such. Dina Jalbert, thank you very much. Still ahead, we're going to be talking to our next guest, Larry Tentarelli. He has a bullish market outlook, several stock picks you're going to want to hear all about, and his preview of what the Fed meeting will be for the end of the month. Let's get that too. We'll be right back.
Yo ya no se está moviendo, pero no marca nada, ni deslistada, ni halt, ni... Son tres, deslist, halt y suspended. Ninguno. Qué raro. Pero bueno, sácate. Sí, la rompió. Bueno, que en sí sigue todavía ahí, pero... A ver, no, esa no. Vamos por acá.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides. We're looking at a market that's hitting record highs. Are these types of highs more to come? Larry Tentarelli thinks I guess he'll tell us. I think he's a little bullish. Chief Technical Strategist, Blue Chip Daily Trend Report. Thank you so much for being with us. I was just saying the NASDAQ and the S&P have hit some highs. Do you foresee more highs between now and the end of the year?
I do. These are very bullish trends right now. One of the strongest buy signals that we can get is new all-time highs. That indicates no overhead resistance, so there's no sellers over top looking to sell into those prices. So it's a very strong trend right now.
So nobody's selling and taking a profit?
Well, I don't want to say nobody's selling, but what happens is when you have stocks that are way down and people paid much higher prices, as the prices go up, people tend to sell into that. But when you have no overhead resistance, there's generally less selling.
So that's good news here. I know you have some stock picks that I do want to get to.
Sure.
But what will be the catalysts that will continue to move us higher in this bullish trend?
We've got earnings starting next week. I think that's going to be a key catalyst to see how these big companies report.
So you think that the outlook, I mean, for example, Delta surprised folks today.
Right.
Right? You expect more positive surprises?
It's tough to say. The trends are strong. So we've seen the big banks break out, like JP Morgan ahead of earnings. The big tech stocks are breaking out ahead of earnings. So the market is expecting strong guidance.
Nobody's worried about tariffs?
We're still worried, but the market's really adjusted to the tariff cycle. April 9th, we saw the lows with the 90-day tariff clause, and the markets have done a good job of working through and adjusting.
And at the same time, I think, everybody was worried about the big, beautiful bill, and that went through, and it's been relatively quiet here in the market. Could the tariffs really jostle the markets? And if it does, if we have some volatility, is that a buying opportunity if we dip?
I think so. As long as we stay in these uptrends, I think that the pullbacks will remain viable. And I've been surprised at how well the markets have worked through tariffs and the big, beautiful bill. And they really worked through almost all the news that's out there. So the markets have been very strong.
And so at this point, let's talk about some of the names that you really like. You like Uber,
yes,
right? I want to hear why you like Uber.
So
where do you
Uber,
think this is headed?
I use Uber all the time, so I've got a bias there, but it's been breaking out to new all-time highs. They're the global leader in ride transportation services, and they've got key partnerships with Waymo, Cruise, and other robo-taxi services, which I think could be a big growth driver going forward.
Yeah, I mean, it's incredible. Right now, it's at hit a high of 97.72, and year to date, it's up over 60%. So certainly a great performance. And I mean, if you got lucky to buy on dips, you could have done even better.
Sure.
What about, is it GE Vernova you have here?
Yes.
Yeah, tell me about that.
So GE Vernova is all things power. They've got nuclear exposure. They've got exposure to electrification. That's a key theme right now with the AI data center build out. Also, there's some bullish tailwinds with the White House executive orders on nuclear. GE Vernova is another stock breaking out to new highs. And what you'll see is that all of my picks basically have the same chart. So regardless of the sector, I'm looking for confirmed uptrends breaking out ideally to new highs.
So you love this momentum that you're seeing. You want to just keep riding the wave. It's not time to get out yet. When we think about some of the software stocks, you have CrowdStrike in there.
Right.
What the stocks look bullish this week?
Cybersecurity. That's
a lot
key
of them.
Growth theme. And CrowdStrike, they're the fundamental leader, above average sales and earnings growth. They're the technical leader, and it's really one of my favorite stocks. It's a high volatility stock, so when it pulls back.
Tengo cuatro, bueno, no sé si se ve en la cámara, pero tengo 4 cuadernos para así escribir cosas diferentes y tenerlas todas a la mano.
Where does that fit in?
Snowflake's very interesting. They're in data analytics. Somewhat of a competitor to Palantir. They're in the same space. But Snowflake was a laggard for about 3 years while everything else was breaking out. Snowflake really couldn't get out of its own way. It recently cleared $200, which was a resistance level going back 3 years. And now it's breaking out 52-week highs. And for the first time, they're expected to be profitable. They've been losing money for years. They're projected to be profitable over the next 12 months.
Yeah, I mean, it's really been jumping. It says Snowflake stock jumps 45%. AI Data Cloud drives the record revenue. It's not, you said a 52-week high, if it's correct. The last high that I see prior was $237. You think it can get to that?
Yes.
Oh, yeah.
Very strong trend. Once it cleared that $200 level, that $200 level was resistance for 3 years. It would run up to 200, go back down, run up, go back down. Now that it's broken through, I think we're looking for more new highs.
Yeah, understood. There's more. You have RTX, which used to be Raytheon.
Yes.
Tell me about RTX.
Very bullish in defense. They're a key player in the Golden Dome missile defense system. They've got bullish tailwinds from the White House. Very, very strong chart. And really global defense, whether it's in the US or in Europe, global defense is very strong.
Yeah, aerospace and defense. So a lot of those names, a lot of people have been getting into those. They like some of the names abroad too, doing the same thing in aerospace and defense.
Vamos a actualizarlo para ver los índices.
The European defense sector has been very strong.
0.35, 0.63, Down es el que va ganando. Okay. Profile. Quiero saber el sector. Healthcare Biotechnology. Creo que ya lo había notado. A ver. Companies, aquí estás. Healthcare Biotechnology. Ah, ok, es que había notado lo de Real Biocorp. Okay, porque hay unas acciones ahí pero andan a la baja. Entonces hago el apunte para saber qué va a estar enterado de lo que va a pasar en el futuro y saber si vendo y controlo la pérdida o compro más acciones o simplemente compro un activo que le dé la vuelta. Son tres opciones siempre. Cuando las acciones andan a la baja y andas en números rojos, obviamente, pues tienes esas tres opciones.
Yeah, the Fed can take a wait and see approach right now. The labor market's very strong. And inflation is still above target. So as long as you have that combination, there's really no reason for the Fed to cut yet. I know that that's a very debatable topic, but right now from the Fed's position, if the labor market is strong, which it is, and inflation's above target, which it is, why would they cut yet?
Larry Tentarelli, Chief Technical Strategist, Blue Chip Daily Trend Report. Thank you so much for being with us. Great to see you. Thank you. Coming up, our panel is ready to talk all about the economy, inflation in particular. We'll be right back.
A ver. Envío. Vamos por días. Y vamos al 7 de julio.
Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Esto fue el 7 de julio.
Actually, I'm seeing something from Schwab.
O sea, de los 1 a los 3, o sea, sí duplicó la inversión.
And if you want, they
Pero,
can manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and
o sea, llegó hasta los $7. O sea, no solo la duplicó, la quintuplicó. Cuatruplicó sin broncas.
Schwab, a modern approach to wealth management.
Pero vean eso, se ha mantenido en los 2.64, como si ese fuera su piso. O sea, comprarla en 2.79 todavía estuvo barato. Que claro, de 2.79 a 89 son $10 de ganancia, pero sería bueno controlar ya a largo plazo, si tienes las acciones y no las quieres vender, controlar esa pérdida.
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Back to the watch list. We bring in our panel to talk all about inflation. Obviously, you know the Fed's focused on jobs and inflation, right? And next week we have CPI, PPI. What do we expect? Eric Pachman's with us, Chief Analytics Officer of Ban Creek Capital Advisors, and Jed Ellerbrook, Portfolio Manager at Argent Capital Management. Thank you both for being with us. So, Eric, some of your thoughts.
Hasta en Nvidia todavía, pero Nvidia también ya está inflada. A pesar de del split que tuvo. Nvidia, o sea, 163, o sea, todavía haberla comprado, ¿qué les gusta? ¿En 150? Porque mucho tiempo estuve en 130, 140. Entonces, o sea, a largo plazo, para adelante. Pero sí, o sea, aquí. Justo yo lo vería como un activo refugio mientras la bolsa suba. Coloco parte del portafolio, y portafolios de 2 activos, o sea, son metodologías a largo plazo, 3 a 5 años, en el que de 30,000 pesos, 18,000 los colocaría en Nvidia. Y los 12,000, entonces ahora sí ya vamos a ver qué activo es el que tiene posibilidad de subir de un día para el otro y va con un stop loss, obviamente. Y esos en un año, esos 30,000, con esa metodología fácil, el doble. Fácil. O sea, es muy sencillo hacer eso. Encontrar el activo. Ya buscar lo demás y ir haciendo el intradía, eso ya es lo complejo. Pero no está mal.
Let's see, Jed, what do you think? Because the Fed's been in this wait and see mode, and you have half the Fed committee saying, cut, 1 cut, 3 cut, whatever. You have a mixture of folks voting for cuts, and some that want to be in this wait and see line. Where do you think the Fed may go with this?
I expect them to hang tight where they are for the time being. It seems like inflation is just kind of pesky at the the recent levels it's been, the 2.5-ish that Eric was talking about. Costco this morning reported their monthly results, and for the second consecutive month, their average ticket increase year over year accelerated. I think it's up to 2.7 or 2.8% now year over year. So we just remain at this kind of pesky, higher than they'd like level, which makes cutting interest rates harder to justify.
So at this point, I mean, what about some of the things within the report here, Jed? I mean, shelter and auto insurance, 2 things that definitely can remain as a sticky thing.
I think there are kind of sticky high items, that impact the average, and others that maybe are exerting some, more downward pressure here recently. But the overall picture seems to be consistent in that 2.5-ish range. And absent change there, I don't really see justification for cuts, despite, Trump's repeated badgering about it.
Right. What do you think about the auto insurance and shelter, Eric?
Yeah. So, I mean, I actually looked at shelter going forward, and, we're coming off that massive run up in 2023, 2022. And we're still cycling off of that. So it's not going to help this month that much just because of an odd cycling issue from the prior year. But when I look forward over the next, call it 6 months, if we keep getting these sequential numbers, which are in like the 20 basis point area, we're going to get another, 0.3 points that are going to come off of inflation. So we actually have a tailwind to core inflation because of that. I do expect that to be offset by gasoline, but who knows what happens to gasoline prices going forward. But if they stay range bound like they have, then that could offset. But
no
I would think there
jodas.
could be downward pressure to core. Again, like putting aside what could go on with tariffs, but the CPI weight is, I'm sorry, the housing weight is so large. Again, it's like almost 40%.
Se fue este tren.
Tariffs really have to rear their ugly head.
O sea, tengo acciones, pero son muy poquitas. O sea, no es como que la gran cosa.
We still have a relatively tight labor market, Jed. Where does that
Pero entonces esto es una señal porque entonces comprar LIXT, a ver.
The labor environment might be weakening a hair on the edges, but
comprar LIXT en los $2 se está convirtiendo una
I just keep
ganga.
coming back to wait and see. And if you made me bet, I would take the under on 2 cuts before year
end. Pues con razón ya fue.
Yeah, the core CPI year over year 2.8%. CPI year over year 2.3%. We'll get this on July 15th. The Fed does not seem so likely to make any moves. In fact, in the Federal Open Market Committee minutes yesterday, they talked about GDP rising, inflation coming down, and unemployment actually is a better picture than even what they are thinking, it seems. I mean, we just got in jobless claims, for example. Eric, your final thoughts?
Yeah, I mean, I think that the labor market, in my view, is weakening substantially. But you have to really look underneath the data. I mean, unemployment came down because the denominator came down, the workforce participation. You're seeing, a tremendous amount of strength in the last payroll number within healthcare. But the day before the government number came out, ADP showed that healthcare declined by about 50,000 jobs. So we're getting conflicting data at this stage, and then the rest of the strength within the payroll report was in state and local government. State and local government education, which is K through 12 public school teachers, janitors, and the like. Public universities, which are being impacted by NIH funding cuts. The item level detail was not positive. I'm looking for strength in other areas of the economy besides healthcare and government. I'm just not seeing it.
Oh, that's interesting. There has been talk that maybe we could be sort of on the brink of a terrible turn. There are the glass half full folks and then those naysayers, the black swan event types. Jed, what do you say to those folks?
I lean optimistic. We're going to learn a lot here over the next few weeks during earnings season. There's a lot of talk about AI leading to job losses, but thus far I haven't seen a whole lot of that. I take Eric's comments about the sources of employment growth coming from like non-cyclical sectors, but that doesn't necessarily mean that there's great weakness amongst the cyclical sectors. It's just flat, and that stability, that lack of real deterioration, I think leaves you feeling not great but decent. The economy's growing slowly.
Yeah, and one thing within the labor report, or wages are not showing inflation in particular, right, Eric?
Yeah, no, that's been a relatively bright spot. And it's not, there is like a relatively mixed view when you kind of look at it overall. But at the end of the day, I mean, what gives me concern, and this is going to take a long time to play out, is in the One Big Beautiful Bill, we finally are trying to start reining in healthcare costs. And I think there are good intentions there, and it obviously was very necessary because of the tax cuts. But the issue is that this is unprecedented. The entire just straight up and to the right growth that we've seen within healthcare jobs, it's never been challenged by $1 trillion of cuts to Medicaid. So we're entering into uncharted territory on what could happen to the job market if we kneecap the biggest growth driver of the job market over the past 30, 40. I even just look back to 1939, all the way back to then, healthcare. Just straight up. Right. So it's a big question mark right now for me.
All right, great to see you both, Eric and Jed. Thank you, Eric Pachman, Jed Ellerbrook. Thank you. And of course, we'll watch for those numbers next week right here on Schwab Network. So don't miss that. You can download our app for free in the Apple App Store. Tune in 24/7 for schwabnetwork.com. I'm Nicole Petalides, watching for records at the closing bell. So keep it here on Schwab Network. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for next-gen investing.
1 p.m. Eastern. Only
Listo,
on
ya,
Schwab
salió.
Network.
Ahora... No quiero esto. Ahora DSG...
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Entonces ya tengo dos, miren. Cuando estaba en 1.30 antes de que todo explotara y cuando estaba en 1.90 su máximo. Entonces lo que quiero es que me avise Webull, el programa que utilizo, cuándo van a alcanzar esos precios para tomar una decisión de si compro más o vendo más o simplemente no hago nada. Por eso hago las alertas. Y pues con cuidado, ¿no?
Just below the flat line at 22,849.60.
Jules, ¿qué pasó con
the
Jules?
Dow up 0.5% right now, 44,697.85, and the Russell up 0.7% at 2268.52. As we take a look, we've got some green here. Only oils are down on the day. The dollar at 97.32. Gold up 0.3% at 33.30.50. Crude oil trading down more than 2% right now at 66.82 a barrel. And Bitcoin hit a record high, now a new record high even since last I looked, at $114,015. That's up more than 1.5% on the day. A couple of our big stories there with those all-time highs, but that is not it for the day. So let's take a look at some of our top stock stories on the day. Joining us now to help me do that is Jenny Horn, obviously co-host of Next Gen Investing. So with Next Gen, we do have some Next Gen stocks on here and quite a few tech ones to talk about today. Let's kick things off with AMD. They got a pretty decent upgrade today.
They did, and actually a name that is seeing the most favorable reaction to this upgrade. So I think that the price warrants, I mean, some of the upside from the street overall community here. HSBC upgrading shares to buy from hold, saying AMD is back in the AI game, highlighting that initially back in January they actually downgraded shares, but now as a result of their AI GPU roadmap, they did highlight less competition, but they are now believers in at least upside to fiscal 2026 estimated AI revenue as they revise their forecast now to be about $15 billion, which is a whopping 57% above consensus, which sits below $10 billion. So this is, in their opinion, driven by a higher than expected pricing premium following the recent M1350 series launch. AMD still has a lot of fans. I mean, there's 36 analysts that do have buy or buy leaning ratings. There's 15 holds. Not a single outperform, but there is one lone sell. And amazingly so, the average price target right now is 134. So that would actually imply downside from where we are currently trading. But I do think it's funny the way that they say back in the AI game, because I don't know if they ever left. It just hasn't really resonated with the street.
I agree with you there when you said that, and I know it's a quote right out of the note, to say they're back. I knew they had the downgrade in January, but what an abrupt turnaround in a 6-month period that they've raised their price target. You know, as I look at their $200 target, this is a 31 times multiple of what they're estimating their EPS for next year is. So, I mean, it's a pretty substantial upside they're viewing. And they're so far above the consensus. You know, their revenue estimates for AI are 57% above the consensus. So they went from bear into bull and really on the far end of bull territory.
Yeah, and I think that is right now, I feel like you see the mass repricing from the sell side on a lot of these chip names where we perhaps had gotten too pessimistic, or we'd seen, and frankly, the AMD hasn't had the performance to match upside though. So I think that rightfully so, re-ratings were definitely moved to the downside, and now it's like the game of catch up where I'll be curious to see if that average starts to inch up. But AMD also still 37% off its all-time highs, which were made back early in 2024. I think perfectly demonstrating that this name was an early winner of the AI hype cycle, but it's yet to really enthuse, and it's continued to unveil new series of architecture and chips. So it's not like it's stopped, providing business in AI. It just hasn't really been read as a clear threat, obviously, to NVIDIA.
Oh, certainly not. And we do need to talk about Palantir. Obviously, Dan Ives put out a note while we're on our AI story, although surprisingly not the same response. AMD up more than 3.5% right now. As I look at Palantir, they're down 0.5%. And this was an extremely bullish note that he gave out.
It was. So now Dan Ives gives a $160 price target, which is a street high amongst all analysts that cover Palantir, and represents about 12% upside from where we closed yesterday. He posted on X initially expressing this growing confidence, though, in their AI strategy, describing it as the company's golden path to becoming an AI stalwart over the next 12 months. The bullish outlook, though, comes as right now many are trying to leverage their AI platform or AIP to integrate data, decisions, as well as operations for clients, which has helped drive a 45% increase in their U.S. commercial revenue. But also, I do think it's important to note that they've been hugely beneficiary of some of these defense spending, even as right now I know there's a lot of uncertainties regarding the strategy of our government spending. There's still, right now, U.S. lawmakers calling for about a 12% increase in defense budgets, specifically here in the U.S. Palantir has been partnering with Blue Force Alliance to digitize and accelerate its U.S. warship production for the Navy. Also has been negotiating to provide technology for the IRS, Social Security, so strengthening its government footprint. And so again, I know that that's always a looming risk, is what happens.
And I think, to me,
es importante escucharlo así como a Tom Lee.
I agree from an M&A perspective. This is time for Cook to rip the Band-Aid off. We talk about Perplexity. That is the no-brainer deal. And I would say if Cook stays on the treadmill when it comes to AI, this would impact, I think, his long-term legacy. I view him as a Hall of Fame CEO, but it would definitely be, I think, it is a pivotal moment.
Okay, it's funny that you use a sports analogy, because I've always thought that the criticism here was a little bit funny. And that in many regards, it was a no-win following an iconic legend like Steve Jobs. I almost look at it like, and you're a sports guy, you're a baseball guy. Joe DiMaggio, Mickey Mantle. Joe DiMaggio, 325 career batting average, won 9 World Series. Who took over after Joe DiMaggio? Mickey Mantle. Was he a slouch? Was he Joe DiMaggio? I mean, he only batted .298 for his career, and he only won 7 World Series. But are you going to tell me that Mickey Mantle didn't do his job well?
And you're talking about, obviously, 2 of the legends, but I'll add to...
Well, Tim Cook's delivered 1,500% returns since he's a CEO.
And
what does that make him?
And I'll add to that. He is the Mickey Mantle of tech. But Mickey Mantle went through periods where he had different bats, and that was parts of his success. If you look at Cook, what he needs to do here, when it comes to AI, we're not talking about anything else except for in the Apple ecosystem. With AI, it's not going to happen internally. For the first time, we talk about it, since Beats 2014, $3 billion, they have to change. And I think the frustration's building, and I just continue to believe you'll not have the status quo. Cook will lead Apple for the next, what I believe, 4 or 5 years. But AI, it's a pivotal time for Cook to get off that treadmill.
Steve Kovac, I mean, at what point does he have to prove, that is Tim Cook, that he has what it takes to take Apple into that next level to cement his legacy as a great CEO, one who can deliver what Walter Piecyk says needs to be delivered?
Yeah, it's next year. It's 2026, Scott, and that's when they said, okay, we're going to take our time, fix the Siri update. It wasn't up to snuff. That's why we had to delay it this year, and they're kicking the can until next year. So between now and sometime next year, let's just call it WWDC of 2026, June of 2026. by then, if they don't announce then people will have to start to worry. But like we talked about a couple weeks ago, Scott, and you also mentioned the tear the stock has been on over the last several days. Part of that is because what ignited that, or the catalyst for that, was this Bloomberg report that Apple might just kind of give up on building its own large language model and instead look for a partner and license the technology from Anthropic or OpenAI. I'm going to guess after Grok's week, not Grok on the list, but there is a chance there for them to use technology that's already proven that they can do securely and fulfill all those privacy promises they do and deliver on the user-facing stuff that they said Siri is going to be able to do. And I think that is why we've seen, or at least part of why we've seen so much of the optimism. We're leaving out tariffs, too, though. So much of the reason of this poor stock performance, Scott, too, is because of the tariff issue, which is largely out of Tim Cook's control. They've done a decent job at managing and moving production to India, flying all those iPhones over to the United States to dodge the worst of the tariffs and things like that. They're still going to take a $900 million charge this quarter because of all the tariff issues. But beyond that, things are very unclear. I will note, with all the words from Donald Trump against Tim Cook and sniping at him for the couple weeks there, the president never really followed through on his promise to tariff iPhones even more. That was supposed to happen at the end of June, never materialized. And by the way, Apple never said it's going to be making iPhones here in the U.S. before then, too. So, you know, you can read it that way, too, that maybe there's a game of chicken going on between the White House and Cupertino.
I mean, it's good points that Steve brings up. I mean, there are things that have been out of Tim Cook's control. It's like he got hit with a fastball from the president in terms of the tariffs and the impact that it was going to have on the China business, which was already a drag for. You could make another argument that those reasons were out of his control, too.
Totally.
Great players go through slumps.
Yep. And he's, I'd say, definitely going through a slump. But the reason I still believe he's the Mickey Mantle of tech is because...
If you start writing that, you better give it credit.
And I will...
I know how you roll.
I actually will give you credit.
Start calling him that tomorrow.
Yeah, so actually, I'm going to give you credit for it. So as the Mickey Mantle of tech, it's about the consumer AI revolution. Steve hits on it. We'll go through Cupertino. But now is the time to make sure you don't let the biggest monetization opportunity that we've seen in 40, 50 years, the fourth industrial revolution. Cupertino doesn't look at that from the outside in. Cook knows, he'll read the room. I believe this is going to be a big change here. We're going to see a deal soon.
All right, thanks for being here. It's an interesting story and certainly gotten a lot of talk, as you've noticed this afternoon on this network. It's Dan Ives and Steve Kovac. Thanks to you as well. Let's bring in a shareholder now, Malcolm Etheridge. What are your thoughts on what Walt Piecyk had to say on CNBC?
Yeah, Scott, I'm in alignment with Ives on this one. I think that, yes, there is some validity to the conversation. We should at least be talking about it, right? Maybe it is time after a decade to talk about who's going to be next up. But I think that realistically, with a CFO departing last year, a COO now stepping down this year, you can't just dismantle the executive ranks of an organization this large and not have any meaningful drop-off. And I think realistically, for me as a shareholder, letting go of Tim Cook here would be tantamount, would be really good reason for me to be selling the stock. And I think a lot of others would be in the same camp because it's just too much disruption all at once for a company that we've already acknowledged is significantly behind where the wave seems to be going and really needs to be doing something to catch up.
So what is that something? If Walter says that they need disruptive change, more of it, what is that? Is that an acquisition, the likes of which they haven't been comfortable doing in the past? That's disruptive. That is being disruptive to what you're normally used to doing.
I don't even think it's singular acquisition. I think it's several. I think that the reason I say that, I know Perplexity is the one that everyone's floating right now, makes perfect sense to replace Siri and be able to come into that Apple ecosystem and immediately make the search conversation a lot more clear. But I think that realistically, not only does Apple need to be acquiring its way into having an AI solution to ChatGPT and Anthropic and everyone else, it also has to acqui-hire designers who are capable of figuring out what's the next wave going to look like. Because as we've heard from several smart brains in Silicon Valley already, the next generation of AI tools is not going to be a device that's in our pocket. It's not going to be a handheld or anything that sits on our desk. It'll be some other kind of wearable. And so figuring out how to bring in the talent capable of driving that conversation is really going to be important for Apple as well. And so I don't think that just one acquisition is going to make it. But at a time when their best mind in AI is already being stolen away, it's really time to put that capital to work and not be trying to financially engineer their way into growth with a $100 billion buyback and thinking that that's going to be the thing that keeps people willing to pay 30 times next year's earnings.
How long are you willing to wait?
Yeah, so I don't really know the answer to that question as clearly as you asked it, simply because I believe that Apple will have some sort of a solution that gets at that declining revenue from iPhone sales. I know that right now the only thing that's positive about this company is they've got double-digit growth in the services side of the business, and that might even be going away if the $20 billion that comes from Google suddenly disappears. But I really believe that a company this large, a $3 trillion tech company that's been a leader for this long, has to have some sort of answer. And so it's really tough for me to imagine a world other than getting rid of the CEO, because there's just not too many people walking around Cupertino, California, who are capable of stepping in and taking over the helm of a company this large. I just don't see a reason for me to be selling the shares right now, especially as I mentioned to you in past conversation. I think we've reached peak pessimism, and I'm not really seeing any downgrades of all these analysts who have these negative things to say about Apple outwardly. The price target, the consensus price target, last I checked, was somewhere around 230. So there really isn't a lot of motion happening. There's not a lot of people putting their money where their mouth is, so to speak. It's just us bemoaning out loud that we really wish this company would get it together.
It's interesting the way you talk about the scarcity of talent. Was Mickey Mantle Joe DiMaggio? No, he was not. Was Mickey Mantle still Mickey Mantle in the Hall of Fame? Oh, yes, he was. Malcolm, thanks. We'll see you soon. Malcolm Etheridge. Tech, speaking of, hitting another new high today as the market looks to extend its record run. Let's welcome in Dan Greenhouse. He's chief strategist for Solus Alternative Asset Management. It's good to have you on. This tech trade just doesn't feel like it's going to let up anytime soon for longer than a minute. I mean, this minute it does, it just picks right up again.
The question, and I think Jason Snipe touched on this on the halftime show, like, why would it let up? And again, tech isn't what I specialize in for the millionth time, but the story remains in place. The CapEx spend remains in place. The demand remains in place. Now you've got VO3 videos all over the internet. There's just no reason, I think, for investors in this space to feel that the narrative that has been in place for 2 or 3 years now is challenged really at all.
If you watch the halftime show, which you obviously did since you're quoting from it, Josh Brown made the argument as well that people are making too much of this idea that this record-setting rally is too concentrated, and largely concentrated in large cap tech. Now it's been in large cap stocks, generally speaking. What about that notion? Do you agree with him?
Yeah, well, listen, I think that there's 2 answers to the question. The first is, I was someone who thought that the rally would diversify, so to speak, but the strength of the AI story has been such that the names in the space and the ancillary or secondary names, if you will, they're so big relative to the rest of the market. Mathematically, they're going to do most of the heavy lifting. That said, look at a chart of BlackRock or State Street.
Well, that's what I'm saying. It has diversified.
Yes,
I mean, industrials are. I think industrials hit another record high today.
I think industrials are leading them.
Financials have been trading at a record high, but it's been a big stock rally.
Well, it's been a big stock rally across sectors in general. There's that. But I would also say, listen, the S&P is now we're just shy of 6,300. The index is up almost 7% for the year. 6 sectors are beating the market year to date.
A veces camino por
5 sectors are trailing. Only
por
2
mi
are
casa
down,
y solo doy vueltas para
so that's pretty diverse.
aflojar la
6
mente y
sectors up,
poder
5
como
sectors down.
hacer que
But on the
fluyan las
individual
ideas.
name basis, you'd like to see roughly 250 names up, 250 names beating the index, 250 names trailing the index. You're a little short of that. But I think to Josh's point, and I would echo it to some degree, assuming I heard what he said, and I was eating lunch when he was talking, so who knows. But I think there is too much being made of, well, it's not broad enough. There's always, you and I are the same age. There are, well, I think I'm a little older than you, or you moisturize much better than I. But for the entirety of our
I didn't like where you were going with it when you started, so just...
I have a youthful 30 you are.
Thanks.
So for our entire careers, people have been lamenting the stock market's too expensive, too concentrated. Remember the nothing but Apple, the MBA market. There's been so many narratives that argued the market couldn't go higher, and here we are, 13% annualized, 15% annualized for a decade now, and all of those narratives have fallen by the wayside. So to that point, I just think the market is too concentrated is the latest in a long iteration of arguments against rallies.
We're about to enter earnings season. Are we going to come out of earnings season almost justifying why the market has been so concentrated? And I could say that from both the tech and financials and the caterpillars of the world too.
But how concentrated could the market be if you just listed 3 separate sectors as being leaders? Industrials, financials, and technology, if you will. Staples, actually, by the way.
I mean, again, if you pulled up the market caps of the entire S&P 500, you would see an extraordinarily divergent move, I think, between the biggest market cap stocks versus the smaller ones within that cohort.
Sure, but again,
I'm not saying there's anything wrong with it, but it is what it is.
Well, listen, you would rather everybody being up an equivalent amount. Let's have socialism for the market. Everyone's up 50%, year to date. The market's up 50%. That would be great, but that's not going to happen.
We're going to steal some market cap. We'll take some market cap from NVIDIA and we'll distribute it down the cap space.
From each according to their market cap. But now, we're completely sidetracked, Scott. But listen, I disagree. Those big names have higher growth rates. They're larger, infinitely larger. Okay. Obviously, they're going to mathematically drag the market higher. But I disagree. Beneath the headline, there are a whole host of stocks and sectors to which you can point that are going up that investors can be associated with.
Do you see any complacency anywhere? Do you look at a VIX, which is now under 16, and say, I mean, look, Jamie Dimon was talking again today about the possibility that rates are going to be much higher than people think, and that there's too much complacency simply regarding that issue in and of itself. Now, I know when Jamie Dimon says something, people are like, oh, well, he always says this and whatever. Not much of what he says has come to fruition. It doesn't matter. He raises a good point.
Yeah.
And by the way, I mean, you should listen to what somebody like Jamie Dimon says when he talks about yields.
Jamie Dimon has access to information I don't. I would concede that point. As the CEO of the best bank in the country, the best run bank. Are people complacent? Probably right now in the short term. As someone who has been relatively bullish on the tariff story over the last couple of months, I think you are now entering a period where some of that story is obviously coming back to the fore. The Brazil story yesterday, although I think there's probably a legal argument why that won't hold. There's an IEEPA case at the end of July that's going to be heard about whether the president can do any of this. But in the meantime, you've got the sectoral tariffs, the 232s, the 301s, et cetera. It might get a little choppy here in the short term, but to your point about earnings season, Delta this morning, obviously, you mentioned the airlines earlier, and Costco gave its monthly update. Costco sales in the U.S. were up 5.5%, maybe a little shy of expectations, but nothing to sneeze at. I've heard nothing this morning on Squawk Box. Someone from the Bank of America Institute talking about the credit card data was on, arguing that the consumer, from a credit card standpoint, nothing is meaningfully different. So,
did you do any work today, or did you just watch CNBC all day?
This is like at 6 in the morning. And by the way, I'm trying to drive viewership, Scott.
Thank you. Thank you. No, we appreciate you. What about the Fed? Is the Fed going to...
By the way, I have an intern watching all day and just tells me...
Is the Fed going to cut rates this year? And how many times?
I think you should probably expect 2 cuts this year. I mean, I get why Jamie Dimon is arguing what he's arguing, and far be it from me to argue with him, but my expectation is you're going to get 2 cuts this year. By the fall, assuming the tariff data bleeds through the way that I think it will and always have thought it will, I don't think that's going to be a sufficient impediment to getting a cut in the fall. And then once you have cut once, you're probably going to want to cut again this year to get it out of the way. And then sometime early next year, you will have the prospect of a new Fed chair, eventually a new Fed chair. All of the contenders, from Bessent on down, have basically made the case for lower interest rates, and so I think a new Fed chair is going to come in. There's probably enough wiggle room on the board to get a couple of rate cuts next year. So you're talking, let's just set the over-under at 100 basis points of reductions between now and the summer of next year.
And that's enough. You don't want any more than that because then that would maybe signal that something was wrong. They had to do it.
Ahora sí que ver al contribuyente de
listen,
este
I don't think you
proyecto.
need more than that. I think you could probably argue, my original argument was you might get stuck at 4.5, and I think obviously we have been stuck at 4.5. Now, with all the new data, the slowing in the labor market, albeit modest, I don't think you need rates at 4.5%. Remember, again, I know Tom Lee was on here making the same argument I've made for some time. Tariffs are a tax, they're not inflation, which is a whole other conversation. But outside of that, please.
No, he's super bullish.
Tom Lee is super bullish?
But I mean, there are people who are throwing out like 7,000 is realistic.
Se queda
My price
callado.
target coming into the year.
I know, but there was a note out today where someone was talking about 5 to 10% more. Another
10% more is 7,000.
10% more is 7,000.
Yeah.
More or less.
And by the way, I only asked that because I did not watch the Tom Lee interview, despite your assumption that I'm watching CNBC all day. Listen, if I had my way, I'd be on air all day. But anyway.
Believe me, we know.
The viewers demand it. But
Believe me.
10% is not, is that out of the realm of possibility? I mean, again, we're up 7% for the year. If by the spring of next year you're up 10% from current levels, is that a particularly shocking amount of gains, especially when you have way into the double-digit growth rates for the largest names?
But let's, the NASDAQ's up 40% since the April low. I mean, it has been the V-est of V-shaped recoveries that we've ever seen.
And the S&P is up, called 35-40% year over year, which is a extended level of gains that usually is followed by a slowdown in appreciation. And last time I checked, 10% appreciation was slower than 30% appreciation.
There's your V-shaped recovery right there.
Yeah, it's been a heck of a rally.
Extraordinary in 3 months.
It's been a heck of a rally. To Josh's point earlier, probably not as broad as you would like, but sufficiently strong to drive the market higher. And I would also make the final anecdote that I always use, which is when my mom gets her Charles Schwab account and she opens it up and sees that her net worth or her investment account went up 10% this quarter, she doesn't call me up and go, how much of that is concentrated in the Mag 7?
Yeah.
She doesn't care. The spiders are up, and for many, 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 many Americans, that's a determining factor.
We'll leave it there. I'll let you run, get back in front of your television set, and we'll see you soon. That's Dan Greenhouse from Solus once again. Christina Partsinevelos joins us now for a look at the biggest names moving into the close. Christina.
Well, Dan briefly mentioned it, but even if there was a travel slowdown throughout the first half of the year, Delta management doesn't appear worried. The airline is confident sales will pick up in the third quarter and reinstated its full-year profit outlook. CEO Ed Bastian telling our Phil LeBeau that he's seeing more clarity in corporate travel. High-priced seats were also boon. Premium revenue grew 5% year over year. That's why you're seeing Delta shares up almost 12%. And because of that confidence in the near term, those results really boosting other domestic carriers. United, American, Southwest, all on your screen. United up almost 15% just on these strong words coming from one leader. Scott?
All right, Christina, thank you very much. Christina Partsinevelos. We're just getting started. Up next, Bitcoin bouncing to a fresh record high. We discuss how to play that space coming up. We're live at the New York Stock Exchange. You're watching Closing Bell on CNBC.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to
Pues
build.
estuvo bueno lo de Dan Ives, ¿no? Que platicaba que pues Apple se está quedando atrás. Que es verdad que pues las últimas cosas que han salido de Apple pues no han sido lo mejor, como el Vision Pro, que nadie lo compra o tienen ventas muy bajas porque cuesta 65,000 pesos. Cuando Meta te vende lo mismo en 10,000 pesos. ¿Qué pasó aquí? A ver. Les juro que cuando vuelva a caer este precio, puta, la voy a comprar. La voy a comprar. 1.27. Ya casi acabamos, gente. Tengo que hacer lo del análisis semanal, pero yo creo que ya mañana. Ahorita en total, pues la verdad fue un día muy lento, pero fue positivo al menos. O sea, en ganancias son como 5,000 pesos. En total como 5,000 pesos. Así de todo. Ya todo eso pues, se divide entre las carteras. Pero ha sido un día pues X. La verdad es que pues de eso a cerrar con pérdida, porque hay días buenos y días malos, ¿no? Como en todo. Así que no estuvo tan mal. Mm, ok, listo. Ya terminé. Ahorita esto ya no pasa nada, ya cerré todas las posiciones. Espérense, ¿qué pasó aquí? Advanced Micro Devices Shares. Ajá. Ah, ok, va, ok. Healthcare stocks moving towards intraday session. ¿Mm? Genial, genial. Perfecto, perfecto, de maravilla. Son buenas noticias. Y voy a desconectarme aquí, muchachos, los voy a dejar aquí. Acabo de notar que dejé ese cuarto abierto. Entra mucha luz. Y nos vemos mañana. Mañana Hoy ni me acuerdo a qué hora me conecté porque a las 7:30 se me hace imposible conectarme porque en serio estoy en putiza. O sea, de las 7:30 hasta las 9:10 que ya estoy relax, relax. Ya me conecto y aún así sigo en chinga, pero a las 7:30, 9 de la mañana es la hora más movida del día. Entonces, donde tengo que tener los 10 sentidos, ay, estoy bien pendejo, me cargue. Tengo que tener, todos los sentidos activados. Puta madre. Solo eso, amigos. Entonces, pues, los dejo. Así que